All right, looking good on my end. Everything should be good to go. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:07 p.m. Eastern Standard Time. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Got a couple minutes of a late start today, so let's jump right into it. Obviously had quite a bit of action in the crypto markets. So we're going to go ahead and get started with those today. Had basically, I think it amounted to about an 8% move on Bitcoin. So that was obviously a good thing. So we'll just kind of break that down. What were the catalysts? Why did it happen? What were we expecting, essentially? This was obviously our previous top right here before the big dump at 52,675. So as soon as we broke through that top, that would basically trigger the market's stop losses for anyone that was short in this situation, or assuming that we put in a lower high right here. So, naturally we're going to see immediately a burst through those prices as the stops get hit. Those stop losses on a short position will be the equivalence of a buy. So that's going to force price action up to the upside. So now let's talk about what came after that. I want to break this down first and actually go to a shorter time frame and tell you exactly what I'm looking at here. So the way I'm seeing this right now is we are getting ready to actually flip this back over to bullish on the 4-hour. I just switched over to the 4-hour. You guys know, obviously, how I trade, how I determine trend, all that stuff. Part of the necessity for what I require to be in a bull trend on whatever time frame I'm looking at is, one, we need to be above the 200 simple and the 200 exponential. Two, obviously we want the 8 and 21 cross to the upside and this to be green. Otherwise, essentially we're just taking what amounts to a scalp trade. But in this case, also what needs to happen is the 200 exponential, the brighter blue down here, needs to be on top of the 200 simple. So we are actually about to cross the 200 exponential back above the 200 simple. And while the indicator oscillators are like at extremely high levels that are unsustainable, all that means is we need to go sideways and consolidate, or have like a small pullback to a, higher low, but that the trend is still intact, and essentially flipping back to bullish on the 4-hour time frame. So let's look at a couple of specific examples of why that's important and, what it looks like when it's not in that situation. For instance, here was the January 21st. Basically we came up here and we topped out at like 40K. We came back down, and then we'll see the 200 simple was on top of the 200 exponential here. We can zoom in a little bit. And then eventually, we actually never flipped them over bearish, like they never flipped over to red or pink, but we consolidated the 200 exponential below there for a while, started to find support on it, and then eventually here, we actually crossed them back to the upside, which by that point in time, obviously on a 4-hour long trending trade, we're at 47,000 by that time. So that was obviously bullish. Kept moving up here to about 58,000, and then we had a pullback back down to the 200 exponential and simple, and then the same thing happened again. The 200 exponential crossed below, 200 simple crossed above. We found support, continued to the upside. So what was that telling us? Well, this ended up being essentially what amounted to our 3 bearish divergence stops. So we had the initial top, then the second top, and then the third top, and that's what gave us our bearish divergence. But each time on the 4-hour, the 200 simple crossed above each of those times. So again, that's not telling you the trend is over. It's not telling you we've topped out. It's telling us that we're running out of momentum to the upside. So then once we broke down here from our third bearish divergence top, and we broke below the 200 exponential and simple, and then their slopes flipped to the downside, we'll notice something that happened right here that stopped us from getting bullish. The reason I did not get bullish on this push back up to the upside, and this looked like a bearish lower high to me, is because when we came back up, the 200 exponential was never able to get back on top of the 200 simple. So we'll see we have the brighter bluer one here that's kind of switching between the red and blue, and then we have like the kind of faded or darker blue here that's switching between like the pink or purple and blue. But the 200 exponential is not able to get back on top because we can't maintain it above price long enough. And then we actually end up selling off And, you know, from there, we go from 58,000 to about 28,000, lose about like 50% of our value. And then we'll notice what happens right here is after the sell-off, you know, the 200 exponential, when we're violently selling off, is below. And then as we kind of start coming back up to the top, we actually flip the 200 exponential back over blue again here just for a second, and then continue to sell off. But the 200 exponential stays on top of the 200 simple. So it never gets completely bearish and tells us that the same way we were running out of momentum to the upside, this area here, once they cross over here, we're running out of momentum to the downside. So then obviously we're able to capitalize on that using the triple bullish divergence and then enter into a position back to the upside, which we were doing that based on the 4 hour, which was on the 821 cross. And then again, once we got on top of the 200 exponential and simple, flipped the slopes back over to the upside, we were extremely bullish throughout that move, took some profits along the way, and then obviously, you know, topped out here, was able to basically sell the top, you know, and then once again, let's notice what happened here. We see that weakness start to happen. The 200 simple is on top of the 200 exponential, telling us that while we haven't necessarily topped out yet, and you'll notice we end up putting in a higher high, but we have run out of momentum to the upside. So that's why the cross between the 200 exponential and simple is so important. And then we come up here, put in a lower high, it fails, we bounce around down here, and now what's happening now is we've actually gotten back on top of the 200 exponential and simple long enough that with that move we got today, that now the 200 exponential has moved up and is getting ready to cross to the upside above the 200 simple. And the truth is, because of the reactionary like speed of the 200 exponential, basically, unless we got some crazy massive sell-off back down to like 46K, the cross is going to happen regardless. So at this point in time, the cross is all but confirmed, which probably has a lot to do with why we got that aggressive move to the upside. You know, basically front running the cross on the 200 exponential and simple, and then obviously also in combination, that would be like the stop loss point. Anyone that didn't take profits on their short on the way down, or anyone that entered a short, you know, assuming that we would top out back on the way up. Bear with me here for 1 second. Okay, yeah, so I'm going to turn on the drawing tools. This chart's a little bit dirty, but don't mind that. But essentially we had this descending channel that we were operating inside of, and then the measured move break of the channel from the bottom of the channel to the top of the channel. You know, we got that. Obviously, we're able to capitalize on, it was a little over 14% move to the upside, 14 and some change. And then actually, in my situation, I actually got caught a little bit on this one. I wasn't necessarily short on this position, but I had taken profits on the majority of that position to the upside already. Assuming, or, you know, basically, I don't want to say necessarily assuming, but based on my trading strategy and what I expect to happen, I was looking at the top right here, the measured move, obviously, which we just demonstrated, and then looking for, you know, what amounted to a lower high. So I figured we would either top out at the 786 or potentially at the 886. So I had closed the majority of my position and then put actually in place my stop loss below the breakdown of the previous candle here when I went to bed, you know, so that if it broke down from those levels, started taking out these candles up here, you know, I would basically, the stop loss would take profits for me on the remainder of the position. Well, exactly what happened to the upside here, where the shorts got stopped out, my long position got stopped out as well. You know, I basically had it at, I can't remember what it was at. It was like 50,575, I think. So it like all but got taken out, like basically to the dollar, which that's fine. It happens. You know, I was forced to take profits. Never a bad thing. Yeah, it went down to like 50,400, and I think I had my stop at 50,575. So now looking at this candle though, when I saw this candle afterwards and it sold off and then got picked back up here, that's actually a pretty bullish candle. Because we held support at the 886, sold off fairly violently, and then it got bought back up. The same way we saw this happen right here. This one's a little more indecision because we push up, we push down, and we're kind of like not sure which way it's going to go. But we see here, we push up once, sell off, it gets bought back up to the fib level, and then we go sideways and then push up to the next fib level. Here we push up, and then again, and then here we push up again. So now what I'm paying attention to, if I was in this position still, I would be looking for, if we get a close on the 4 hour below either of these previous two candles. So while technically we have already done that right now, if I'm like, you know, awake and trading actively, you know, I'm going to wait and see if this candle closes below the previous highs of these candles, we take out those candles, that's the beginning of basically a pullback or consolidation. But in the event that I'm, asleep or something like that, and I do put a hard stop in place, I would potentially get the same situation happen where a wick could come down and take me out of that position, which that's fine. Again, we take profits along the way, lock in profits. I would rather miss out on, an extra few percent to the upside than end up, negative on a winning trade or giving up, a nice portion of my wins. So, but that is obviously, in my opinion, a big change with what's been going on here. Taking out this previous high here is obviously a good thing. Does not mean that we're necessarily going to go like crazy bullish on the market or anything like that, but we're seeing the beginning signs. We're seeing important things. Now, what we want to pay attention to is, obviously, do we start showing bearishness in here? Do we continue up to the 1.236, the 1.5? Like, where would this potentially be topping out at? So that's the 4 hour for now. And obviously, based on the indicator oscillators, this is obviously blue. We're above the slope line. Looks very powerful. We avoided putting in any kind of bearish divergence, which is obviously key. We're inside of the bullish control zone. The Stochs are still moving up to the upside aggressively. That's good. So what we're paying attention to is when we do get the hard sell signal eventually, and when we come out of the bullish control zone, what happens at that point in time. But as for now, this basically just looks to me like we have a low here, we have a higher low here, and then when we come back on this pullback, we just want to see, basically a higher low after that, or something to that effect. So, but if we do the actual breakdown on this move from our bottom right here, we'll notice that this was obviously like trading very, very technically, which is what we always want to see. We want to see these charts trading extremely technically. And that's exactly what we see, because if we take our Fibonacci from the low down here at like 28,000 to the high right here on the initial push up to 52,800, when we sold back off, where do we come down to? Come down exactly to the 0.5 Fibonacci, which is obviously, let me pull this out a little more so it's a little more clear. We come down exactly to the 0.5, which is a 50%, pullback or, retracement of the move itself. So while we slightly underperform the measure move of the channel breakdown right here that we were expecting, we slightly overperform, well, not even slightly, we definitely overperform the move back to the upside now. So now what we're paying attention to is, is this still going to amount to an A, a B up here, and then a C pullback? Or was this already, or, ABC has already played out to some degree, and then now this is just the beginning of a new wave structure. So at this point in time, because this bottom right here is playing out so technically to the upside with that 0.5 or 50% pullback, that would amount to essentially what could be our wave 1 to the upside, our wave 2 to the downside, and then we want to see where are we likely to get our wave 3 to play out. So I'm going to go ahead and I'm going to pull off the green one now just to kind of clean this up a little bit. And then we're going to take a look at where we could potentially get, our next wave at. So if we have now, and it's important to look at this ahead of time because, yeah, it's definitely possible we just start selling off. We put in a lower high, and that's our market cycle, and that was just our high, and that was our lower high. This was just a little push up to stop out the shorts right here, get everybody bullish again, provide liquidity. That is 100% a possibility. But it's also a possibility this was a retracement, and now we're going to start another 5-wave structure to the upside. So we want to look at both those and see what's going on here. So now we're going to use this yellow Fibonacci to give us our extensions to the upside and see potentially, where our targets would amount to based on that. So if we have to look at our 5-wave structure here, what we're looking at is, if this is our 0 point down here, this is our wave 1 top right here. This is our wave 2 bottom right here. We want to see where's our 3 going to come down to, our 4, and then obviously our 5, so that we can basically put in place rough idea as to where we're going to go to, or targets, should this trend continue to the upside and remain bullish. So we already have obviously the 0, the 1, the 2. So we know when the 4 pulls back, no matter where it pulls back to, it cannot come down below the 1. So we can just put that in place at the 1 for now. And then we're going to look at our Fibonacci extension targets for where we're going to potentially move to the upside. Now we know obviously our next rule that we're going to pay attention to is, we know that wave 1 is already put in, so we can measure the length of wave 1, and we know that wave 2 is the retracement of wave 1, and that was a 50% retrace. And then we know that our wave 3 is often the longest but never the shortest. So if we assume that the wave 3 is not going to be, the wave 1 is our initial move up here, so the wave 3 does not have to be longer than the 1. So the 1 could be the longest, the 3 could be in the middle, and then the 5 would have to be the shortest. It would have to be based on those rules. But it's possible, obviously, and typically the wave 3 or the wave 5 will typically be the longest. The wave 1 just gets us moving. The wave 2 is to put in a higher low, and then the wave 3 is the biggest wave, and then, wave 4 pullback. Sometimes you get a truncated wave 5, which is the longest, but oftentimes we'll see that our wave 3 is in fact our longest wave. But proportionately to the wave 1, we can see we had basically a $23,121 wave 1. So if we say roughly $23,150 would give us a wave 3 that is at least as long as wave 1. We can just put that down here. And then 23,150 is what we said. That would put us right around the 1.618 Fibonacci target, just shy of it basically. So let's put our wave 3 in place right here, assuming that will be our target. So that's going to be the 1.618, the 161.8% extension of the pullback itself. So we know the wave 1 was 21,150, let's say, and then we pulled back 50% of the move to the upside. So now our Fibonacci extension, the 1.618, is our favorite Fibonacci extension target, which is the extension of the actual pullback itself. And then that lines up again with the length of the wave 1. So that would give us a wave 1 that is shorter than the wave 3, and then the Fibonacci extension targets and everything line up. And then it would give us a pullback of our wave 3 right here. So we could, again, look at that and get a rough idea. Look for some symmetry right here from the top of wave 3. We'll just turn that one green for a minute. That would give us a bullish retracement almost perfectly. So the top of the wave 1 right here, the bottom of the wave 2 was a 50% pullback. And then for the wave 3 itself, this would be a 0.382% or 38% pullback of our wave 3 now, and then that's going to line up perfectly with our top from the wave 1 and the 4, so that we know the 4 can't pull back lower than the top of the 1 on a long time frame. Obviously, 4 hour or daily is 4 hours a little short. Daily or weekly or whatever is obviously a little more ideal. And then at that point in time, we can just figure out, where's our wave 5 potentially going to happen. So we would just do the same thing from the top of the wave 3 to the bottom of the wave 4. I'm just going to turn that one red. I'm going to go ahead and turn off the green one now. And then we can just sort of look at where we would potentially be topping out on this as well. So again, assuming we got basically, a 1.618% move at this point in time, because the 3 is longer than the 1, the 5 could be shorter or longer. So we could potentially have, our target up here at 71,000. We could potentially have our target up here at the 2.618, which would be 86,000. Any of these things are viable. We could pull up here exactly to the 1 and have a double top scenario play out. Any of those are possibilities. But in this case, I'm just going to put it at our favorite target, which is the 1.618, which would be a $71,000 Bitcoin. So definitely a possibility. Obviously at this point in time, the 4 hour is looking bullish, and we're very close to flipping over to bullish on the daily as well. And you could say, yeah, but we're already bullish. How can you not be bullish? What do you mean? This is obviously bullish. Everything's bullish. We're going to new highs. Well, the difference between you saying that and what I'm saying is, I'm using a predetermined set of criteria that I use over and over again that allows me to be consistently, continually profitable. It's measurable, it's repeatable, and it works. So the difference being, you could say right now, and I could say it, I could agree with you and say, this is very bullish. We're probably going to new all-time highs. But I trade a different way. I trade like a mechanic. I fix things when they're broken. I do the same thing over and over again. That way, I don't have user error involved. So that's why it's so key for me to have a predefined set of criteria and then base what I'm doing on that. So while I said here that we're about to get the cross of the 200 exponential above the 200 simple on the 4-hour. If we switch over now to a slightly longer time frame and we look at the daily, we'll see, same situation happen. 200 exponential crosses above 200 simple. We go into a long uptrend, bull trend. 821 cross to the downside. We put in a lower high. That starts looking bearish, obviously. Break down below both of them on the daily. We still have the 200 simple slope to the upside this whole entire time. And then the 200 exponential loses the slope. When we get back above the 200 exponential, we start getting bullish here again. And then again, we get on top of the both of them. They're both bullish right here, but we have other things giving us some red flags that we're potentially topping out. And then again, when we sell off back down here, find support at the 200 exponential, we're paying attention to basically a low and then a higher low, which is good. That's obviously the beginning of an uptrend. We spoke about that specifically. What we wanted to see after that was taking out this high. So now we have a low, then we have a high, then we have a higher low, and now we have a higher high, confirming that we are in fact in some form of an uptrend. And now the last thing we need to happen on the daily chart is, because of the slowness of the 200 simple moving average, it still has a negative slope right here. We can see it in pink, and the 200 exponential is below that. So in a short amount of time, a few days or weeks, this will have basically consolidated, moved to the upside, or had a pullback to the moving averages. But as long as we stay on top of the 200 simple moving average, as long as we're able to hold 45,000, this will look extremely bullish to me again, because the 200 exponential will move back to the upside, the 200 simple will level back out, and then we can go back into a, confirmed bull trend. And again, we have targets to the upside, we have expectations, we have criteria that's necessary. Obviously, you could argue that the moment we take out, depending on what time frame you're looking at, basically 64,000, we're in a blue sky breakout. So in a blue sky breakout, everyone that has ever bought Bitcoin is profitable. Therefore, there's no reason to sell. You're not just going to guess where the top's going to be and sell off your crypto. You're going to basically, just wait until you start seeing signs from the market that we're potentially topping out. So that's how I'm looking at it. That's how I am currently viewing the price action, and why it's so important. That's my targets to the upside. That's my rationale for looking at it this way. Again, if we look at on the daily here, once the price action, the histogram is above the blue slope line, we know we are in a bullish uptrend, which is how we're able to capitalize on that move. And then again here, we have the 821 crossing to the upside. We have the blue bullishness, the green histogram above the zero line, above the slope line. The slope line is blue. We're in the bullish control zone here. We are at very high levels currently. We are currently at 94 out of 100, which is where this maxes out. So it would not be unrealistic to think that we would put in some sort of topping pattern or temporary pullback at this point in time. But no reason to get bearish on any of this price action until we have a reason otherwise. But I am very close to just flipping over to, once again, being completely bullish in these markets. So, and again, if someone else has a different way that they are bullish or whatever based on technicals, that's completely fine. You can say, well, I was bullish way before you, so I was able to capitalize on more of the move. That's totally fine. That is 100% fine. I have no problem with people doing that. The most important thing is that whatever you're doing, that you're quantifying it and you're able to repeat it. That is literally, in my opinion, the only thing that matters. As long as you can consistently do the same thing over and over again, you could take out a piece of paper, write down your rules, and someone who has never done this before, has no idea, what your rules are or your trading strategy, can look at those rules, follow them, and be successful. That is the most important thing, in my opinion, to a trading strategy. So now we can look at, essentially, what I have here is a bullish channel to the upside. We have our low down here. We have our lows right here. We have our highs right here, where we have, obviously 2 touches on the bottom and at least, a couple touches on the top. You could argue this could be like slightly moved down, but something like that, basically. At this point in time, what we're looking at is where we would potentially be topping out, which again, that would be the 1.618. I'm going to take... Yeah, I'll leave it on there for a second. I'm going to move this 3 over to here, because that would be a touch to the top of the channel. That would be a touch to the 1.618, which is what we're paying attention to for our potential top. And when that might happen, somewhere around like October 13th, roughly. And then obviously for our pullback, if we're expecting the pullback here, we would move it over time-wise and assume that we would go into a consolidated like sideways or downtrend and touch the bottom of the channel. Again, this is not have to be, it doesn't have to be clockwork. but more often than not, we'll see that the more of these points we have in mind, the more confluence there is. And once we do actually put in a top or touch the top of the channel or something like that, we can then reevaluate, move these slightly. But again, we're using these are less reliable, but they're predictive. So when we get up here and all of a sudden we start looking like we're topping out, we already have a channel in play. We already have Fibonacci extension targets in play. We have an area in mind that we are expecting price action to top out in, so that we're not surprised if all of a sudden it happens and it's not, you don't get caught with your pants down while you're sleeping or while you're out and about or something like that. And then you have to reactionary make a move based on, emotions of what's happening in the market. We have predetermined area that we're paying attention to and potential topping area. We have predetermined, where we would expect that to top out, where we would expect it then to bottom out. And then we have invalidation in mind as well. So obviously, if this fails and starts to sell off and we take out this low right here, that would invalidate our uptrend, as now we would have put in a higher high, but we would put in a lower low. So that could start messing with things. Obviously, if this rolled over after we move up here and then pulls back lower than the previous high right here at 52,800, we know we have invalidated the Fibonacci targets as well, because we can't have the 4 retrace less than the 1. If we have this underperform, then we know after that no matter what happens, we know the wave 5 cannot be longer than the wave 3, because that would make the wave 3 the shortest wave. So we have a bunch of different rules and different measurable, quantifiable things happening that we can then look back on, so that we're expecting certain things to happen. And then if those things don't happen, or if they do happen, we already have planned out, mapped out a sort of destination for where crypto or Bitcoin might be going. So that is what I'm looking at with Bitcoin right now. That's what I'm paying attention to, the most important levels. As far as I am concerned right now, though, I'm about 75% bullish, let's say, on Bitcoin, on crypto, on the daily. Based on my indicator oscillators. Obviously, this one is completely bullish. This one is now completely bullish. And then based on our moving averages, wrong one. Based on the moving averages, like we discussed here, the majority of the criteria have been met. We now have a blue slope on the 200 exponential. We do still have a red slope on the 200 simple, but we're above that. So all we have to do is maintain price action and it will flip. We have the 8 and 21 flip to the upside in green right here. So that is obviously bullish. And then finally, we just need the 200 exponential on top of the 200 simple. So as far as I'm concerned, I'm over 75% bullish, basically using these 3 indicators on Bitcoin's price action. If we were to take out the high right here, obviously, that would probably line up with around the same amount of time. But we have to be very careful on what's happening now. You guys will notice that I displayed the, Wall Street cheat sheet thumbnail for our video today. And, this is what a lower high, complacency rally looks like. We come up here, we put in a high, we have a sell off, we consolidate and start creeping up near the highs again, and then we put in a lower high and sell off. So that is the reason that I'm not 100% bullish right now. You could ask me in my heart, in my feelings, in my gut, what do I think is going to happen? What's the percentage probability that we go to new highs? I could tell you all that stuff, but it would mean absolutely nothing. You could argue that maybe your gut feeling after trading for years or doing tens of thousands of hours of technical analysis means something. Sure, but it's not quantifiable. I can't tell you on a piece of paper, I can't write for you on a trading plan, the feeling that you're going to feel when you just know inside your heart and your mind that Bitcoin is going to new highs. I can't do that. I can't quantify that for you. What I can quantify is my very strict trading criteria that I have just done. So hopefully that is useful for you guys. Anyone using the TJD Master, obviously this is exponentially more valuable to you because you can use all 3 of these indicators exactly as I have them displayed here. So that is our Bitcoin technical analysis for today. If you are just tuning in, or if this is just an excerpt, I would like to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Just going to jump over in the comment section real quick, as I see you guys are active, and I like to always encourage that type of behavior, as I do appreciate the engagements. And then we're actually going to look at something else here. I'm going to look at the futures chart briefly. I would look at another Bitcoin chart I have, but most importantly right now, what I'm really paying attention to is our Bitcoin dominance and our crypto cap, because there's something big happening over there that we've been discussing, expecting, and it's playing out perfectly right now. So let me jump in the comments and say what's up to you guys, and then we'll get rolling. Oh, and bear with me here as my eye is acting up today, so everything's just a little bit blurry there. What's going on, Al? Hello, do you do any buy, sell signals? I mean, I do technical analysis and lay out a lot of trade setups like in the live streams, but I only do them twice a week. I do have a paid private group that gives you access to the TJD master, which is this indicator right here, proprietary indicator I use. All the rest of the indicators are actually free. So, you know, in that group, I lay out trade setups real time. And then obviously do like technical analysis, display charts, and everything like that. So that's where you're going to get like the signals is in the paid Discord group. But not, I don't use like social media otherwise. So I'm not like on Twitter, like buy here, sell here. But I do display like my actual trade setups, targets, stop losses, and then specific justifications. Because in the end, I'm not here to tell anyone when to buy or sell. As a matter of fact, I don't do that at all. This is not financial advice. I'm not telling anyone how to win or lose. What I'm doing is telling you what I'm doing and why I'm doing it so that you can learn to do it for yourself and eventually become self-sufficient. Because in my opinion, that's the most important thing. So I'm really here to teach, and most of the people that are involved are here to learn, obviously. So where to set buy order if we have some pullback. Yeah, I mean, I just went over all that, obviously, Al, in great depth. Consider to answer questions from your 4 viewers. Yeah, I do. But I don't just stop every time somebody asks a question. I do technical analysis, and then I take short breaks and answer questions. So thank you. Honkiness literally just said the same thing. He answers when he takes a break. Al says, thank you, da da da. I'm obviously behind on this for a minute there, but what is going on? Fit Shatter? Dude, Crypto Trend Trader is giving a detailed analysis, the best out there, and he'll come look at the chat when he takes a break. Yeah, see, you can tell who's here regularly, knows what's going on. So welcome, Al, for the first time. Glad to have you, my friend. Yeah, I do it pretty structured, man. I basically do like, you know, 15 to 30 minutes, sometimes an hour, depending on what's going on whatever I'm talking about. And then I'll take a couple minutes, and then I'll usually take like a short break. I typically try to keep the live streams between roughly 2 and 3 hours. And then throughout the week, I will do excerpts where I just post specific assets or whatever. You know, obviously, while there's a bunch of stuff going on in the markets or whatever, I understand everybody gets a little, you know, eager or whatever. But the important thing and what I really try to do here is lay out what I'm expecting to happen in a bearish or bullish scenario, and then explain to you guys you know, on different assets, why I'm looking at something a certain way. And then the more time you hang around for, the more you watch what I'm doing, the more you'll see that I literally do the same thing over and over again. And once you two learn how to do it, you know, you're just adding like tools to your utility belt. And again, the main goal is to make you guys completely self-sufficient and able to trade for yourself, to understand, you know, all the like hundreds of thousands of hours I've put into, you know, not only like the indicators, the trading strategy, like, you know, everything here, so that you can do, you know, the goal for everybody, I think, that's into like trading or investing or whatever, is to become self-sufficient. I think that's everyone's goal, to eventually say, F the man, quit your job, and do this full time by yourself. So that's what I'm going for. I'm trying to help people to learn how to do that as best I can, but obviously not giving you guys financial advice or anything. If you listen to me, I'm sure you'll just lose all your money. So here we got the Coinbase chart, and then I'm going to go through, we'll look at futures next. Coinbase chart here on the daily, we can see basically our traditional stochastic is, I mean, we're at the topping levels here. You know, this is like 100. It obviously maxes out at 100. So, you know, you can see quite a few times we came up to the top, topped out, and then bounced back up again. So it doesn't just necessarily mean we have to like sell off extremely bearish. As far as a pullback goes, if we get just like some small little itsy bitsy pullback, I think it's realistic to think that our previous top right here at 52,700 would act as support on a pullback, or slightly higher, which would be that Fibonacci retracement. So And then here on the MACD, we see we have quite a bit of momentum to the upside, consistently putting in larger bars. That is good. That means we are moving powerfully in a trend to the upside, at least for now. And then finally our RSI here as well. You know, we made it up to like the 70 level. Oh, you know what? This is just, yeah, because this is the standard RSI. It doesn't have my settings on it. I typically use like the 80 area as my own. I look at 80 and 90. So, you know, RSI basically topping out at like the 70. But there's still plenty of room to run to the upside. And just a little like peak like this doesn't mean we can't just put in a higher peak right afterwards, or, you know, turn it back around and continue to the upside. Matter of fact, there's quite a few examples just right here, you know, where we came up here, peaked, and then go higher right afterwards, peaked, and then go higher right afterwards, peaked, and then go higher right afterwards. So I'm not like getting extremely bearish or anything on these things, but I am paying attention to these levels. We were able to invalidate any of the potential bearish divergence, which was obviously good. We were able to take out the previous high, which was obviously good. And so far, momentum is in our favor as well. So, and then if we look at our futures chart, once again, we see a slightly different signature taking place on our indicator oscillators, which is very important because we were discussing this the entire time, how we actually had stayed above the 200 exponential and simple with the slope to the upside. So while now we have already fulfilled one additional criteria on the Bitcoin futures chart, we have the 821 cross to the upside. We're on top of the 200 simple. We're on top of the 200 exponential. Both have a slope to the upside. The one thing we're missing right here is the 200 exponential is not above the 200 simple. So typically this is how markets top out. The 200 simple is above the 200 exponential. We want it to be the 200 exponential above the 200 simple because that means momentum is in our favor. And then we see obviously here, we are preparing to enter into the bullish control zone. The knife is at kind of a high level here, but with a powerful move like that, we would expect that to happen. And then obviously very importantly as well, we have all green histograms above the zero line, above the slope line, and we have maintained the blue slope line, which oftentimes this will not be the case. Most of the time when we break down below and the slope line remains blue, when we come back up to it, it will fail. In this case, obviously right here, we were able to do it, but we didn't break down far from it. Here, it flipped over red slightly, and then we were able to get back on top of it. And then here, we actually were able to get back on top of it, but then it failed almost immediately afterwards. So, you know, in this case, obviously, that amounted to a top. So again, we need to be careful, but as long as this momentum stays to the upside and we keep moving here, you know, it won't take long for this 200 exponential to get back on top. So definitely seeing some signs of strength that are important in these markets. But, you know, it's nothing unexpected. We did overperform the initial move that we were expecting right here. But, you know, there's nothing wrong with that. That's obviously a good thing. I have said, you know, probably 1,000 times that I would rather take profits too soon than not take profits and turn a winner into a loser or give back, you know, what could have been locked in. So let's jump over. I'm going to skip through the altcoins real quick and then we'll come back to them. I want to talk about Bitcoin dominance. So this is something that we've been paying attention to and discussing quite a bit on the channel and then also in the group as well. Shout out to my boy Bill. We were discussing actually this bottom right here and what's been going on here. So I have been comparing this price action and what I was expecting to happen to this previous price action here as well. And this was our 2018 top, which was really, it was the 2017 top in Bitcoin, but altcoins ran quite a bit higher. So Bitcoin dominance went down because the altcoins continued to run while Bitcoin went sideways. So that made this chart go down. Obviously, Bitcoin was losing market cap dominance. And then we came back up, failed to cross the 821 back to the upside. And then we came down and we put in a higher low. You know, and then obviously Bitcoin gained a bunch of momentum as the markets topped out and the altcoins basically went, you know, parabolic to the downside. But Bitcoin went down, but less, if that makes sense. And now here we have obviously still in a powerful downtrend as we're below the 200 exponential and simple. Oh, and this is also on the weekly chart, not the daily. I like to look at this on longer time frames. We'll see here we came down and put in our low right here on the Bitcoin dominance in May. And then we came down and retested it right here in September. So we put in actually a slightly lower low, and it's tough to tell. They look really close, and I know the volume's probably blocking it, but this one is slightly lower than this one here. And then if we look at our indicator oscillators, when we came down here, we have a low on our blue right here, and then now we have a low, a higher low, potentially, on the blue right here. And then again, we have obviously a switch between the red and green histogram. That was corresponding with our lows here. And then now we have flipped a couple red and then back to green here. So now we have a higher low. So we basically have bullish divergence between these 2 points and our 2 indicator oscillators. So again, sometimes you'll put in a third drive of divergence. It is possible we come back down and take that out, but we were expecting one of 2 situations to happen and had been discussing it, which is partially why this is not a surprise that we got a violent move in Bitcoin. And like the video says, Bitcoin finally got its nut, but left the altcoins behind, or at the altcoins expenses, because we see here a big green candle in the market cap dominance for Bitcoin, but we see that 90% of the altcoins barely moved at all. As a matter of fact, many of them were down today. So the real question is, where did all the money come from? Is it new money flowing into the space? And the answer to that question is no, it's not new money flowing into the space. It's money flowing out of all the shit coins back into Bitcoin, telling us that probably people think either the shit coins have topped, or there was like a concerted effort between the whales to use some of their gains to push Bitcoin higher so that the bull run could continue. Either of those is acceptable. The alternative situation, which we know now is not what happened, would be Bitcoin starts to sell off and then the altcoins sell off more violently. So Bitcoin's market cap dominance goes up as all the cryptos go down. But we know from our last few times when we had sell-offs that most of the shitcoins have been selling off around the same as Bitcoin. There's no reason at this point in time. People aren't afraid of being stuck in shitcoins going into a bear market. So they're not afraid that they're going to go down 90-something% when Bitcoin drops like 50 or 60 or 70. So right now, everyone is super confident with all their like trash bag altcoins. So no one is fleeing from them as they like go bust or projects disappear or they sell off exponentially worse than Bitcoin. So we're seeing something that happens in like the euphoria stage, which is something else that has me like, a little cautiously ambitious about this move to the upside. Because what I would expect to happen at the end of a bull cycle is once the altcoins have run, many of them have put in new highs after Bitcoin has, and then eventually those people, those investors, whales, whatever, they're going to take their money out of all these shitcoins that they've been making gains on, and then they're going to move that back into Bitcoin because they want to actually have Bitcoin. They're just using the shitcoins as, a vehicle to make exponential gains, because we all know that typically shitcoins will move up and down with a higher volatility. So, and now if we just zoom in this chart here, I do want to look at it on, obviously we made it back up to the 21 right here. It is possible we get a similar rejection like this. But at this point in time with the bullish divergence, basically just a weekly close somewhere around like 45.5. And if we can hold that level, if this crosses back to the upside, it's going to tell us Bitcoin is going into, a micro uptrend inside of the macro downtrend. So if that was the case, once again, one of 2 situations is happening. Bitcoin is going parabolic and the alts are moving to the upside, sideways, or down while this happens. But regardless, Bitcoin is moving higher, faster, proportionately to the alts, or we're getting a sell-off and Bitcoin is maintaining its value much better than the altcoins as they sell off more violently. So either one of those situations, once again, is possible. And again, this is the exact situation we had play out with the gold-silver chart. When everyone else was extremely bullish on gold and silver as it looked like they were getting ready to break out to new highs, we looked at the gold-silver ratio, and that chart was able to give us the answer. Were we going to be going higher or were we going to be going lower? And the answer ended up being correct, obviously, as what happened was gold started to sell off and silver started to sell off more violently. Therefore, the gold-silver ratio was going up. So that's very similar to what we see happening on Bitcoin. So now here on the daily, we see the 821 have crossed to the downside, to the upside right here. And now we're coming up here to retest the 200 exponential and simple. And now what's happening with our momentum? Remember, our blue 200 exponential is the red when it's in a downtrend. So as long as that is below the 200 simple, which is the like pink, we know that we're gaining strength or momentum to the downside. So now here, once we got this cross right here between the 200 exponential and simple, now the 200 exponential is on top. So that is telling us that we are actually losing momentum to the downside. So what does that say? Well, we have likely bottomed on this chart, at least for now. It is possible we come down here and put in a lower low, but the likelihood is that this move is done to the downside, and that now Bitcoin will continue to gain strength compared to altcoins. And then if we just look at this on the daily, we can see here once again, this was our low on the daily. We have a slightly higher low here on the daily. So we don't have the same divergence signal showing up on the daily, more so on the weekly, but we are inside the bullish control zone. We are coming up to retest these. The 200s are losing strength to the downside. We have a blue slope line to the upside, all green histograms, and we're above the zero line. So that tells us more than likely we will see the remainder of this move and, across back up to our target around roughly like 47%, at which point in time, we have quite a bit of resistance from these previous points as well. So it's not unrealistic to think that we move up to like 47 or 48 and then see at least like a temporary top on this. So, but this is a very important chart, and this Bitcoin dominance chart was able to actually let us know what was likely going to happen in this situation. So I'm still cautiously optimistic on the Bitcoin price action that we've seen, but now you guys know my exact rationale. So now what is the other way that we can tell, basically like hidden secrets of the market? Well, let's take a look at our total market cap and see what is this chart telling us. Well, when we got our high back here, that was when Bitcoin topped out in May, and the altcoins, and then they got the violent sell-off, 50% sell-off, etc. We consolidated, we got our bullish divergence that played out, triple bullish divergence came up here, and now what happened when that happened? We have the high right here, and then when we came up here on the weekly chart, we'll notice that Bitcoin did not even come near to its high, and some, but not many, of the altcoins put in new all-time highs. So we had things like Cardano, we had Solana, we had many other shitcoins come up and put in new all-time highs. So the money that went into those and the value created by those price rises moved the total market cap back up to, basically those same levels. And keep in mind, that does not mean that, an extra $1 trillion flowed into crypto in that time. It just means that if you take the market cap of each of those coins, it ended up at the same level. So if you have some kind of shit coin like Cardano, let's say, and all of a sudden it goes from $2 to $3, the market cap on Cardano goes up by 50%. Because all it does, market cap is only calculated by taking the most recent price, which at the time was $3, and then multiplying it by the total shitcoins in existence. So it does not mean that whatever Cardano's market cap is how much money flowed into Cardano, nor does it mean that it would ever be possible for that amount of market cap to be extracted from Cardano, because the selling would drive down the price. So imagine, hypothetically, you have a situation where there's only 10 of a certain crypto in existence, and all 10 of those crypto were sold, and someone has them, and the last price they traded for was $10. The total market cap of that crypto is then $100, because it's the last price sold for, $10, times the total supply, which is 10, so it's $100. So if one person then sells their that coin, that 1 in 10 coin that we have, but will only sell it for $100 now, and no one else will sell at any lower price than that. If someone steps in and buys that coin for $100, now all the other coins based on the market cap are technically worth $100 each. So now you have 10 coins at $100, giving you a total market cap of $1,000. So that extra $100 that was purchased that last coin for made the entire market cap go up from a total of $100 market cap to a total of $1,000 market cap. So $100 10x the market cap when the market cap was already $100. So it's a rather skewed way of calculating things and can be like a little confusing to people at times. So it is important to understand that this is not always the most accurate to look at on its own. But what we see here now is when that topped out basically around the same level again, and very few things put in a new all-time high, we didn't see necessarily that extra whatever $1 trillion flow into crypto. We just saw that calculation give us essentially the same top here. And now here we have sold off again to a higher low, and now we've come up once again to that same high. But this time, almost none of the cryptos are at new all-time highs. Bitcoin is not at a new all-time high, and yet somehow we're essentially retesting those same levels once again. So again, we have to be very careful with how we look at these things. But what is this telling us? Well, technically on the weekly, we have a high, we have a slightly lower high, and then we're still slightly lower now. So wherever this weekly close at, we want to see, do we get some kind of divergence? Does it look good? You know, essentially the oscillator so far looks decent. We're above the slope line. We have green histograms. You know, Stokes are inside the bullish control zone. Overall, it looks good. But it's very important that we understand the distinction between what this is telling us and how it's calculated, because it can be, I don't want to say manipulated, but the way that it is calculated can be deceitful in some sense. So I'm going to take a quick break and then we'll jump back into it. I just wanted to do a detailed view at these. We'll do our typical crypto altcoins, shitcoins, whatever. If you want a specific altcoin done, you know, leave in the comments right now. And I'm just going to be like 2 minutes and then we'll jump back into it. Just going to grab a drink and use the restroom real quick. And then we will keep on rolling, baby. All right, let's get back into it. If you're just tuning in, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Responsibly. Welcome back. Let's see. Get caught back up with the comments here real quick. On extreme greed now, 76. Do you consider it? Plus ETH did not set a new HH. Yeah, I mean, I consider it to some degree. I mean, but it's almost like a contrary indicator. Like when people are extremely greedy, it's like usually like a topping type scenario. When people are extremely scared, it's usually a bottoming scenario. But I'm also like sort of a contrarian in that sense as well. But again, a lot of that stuff is, while it's technically technical, it's not nearly as reliable to me. I have a pretty set system and everything. So with the exception of like, I obviously use candlestick patterns, chart patterns, and then moving averages, and then obviously indicator oscillators. But if you watch enough of my videos, you see I literally do the same thing over and over again on any asset. And there's very few things that are different. Fibonacci extensions, Fibonacci retracements, etc. So dominance usually grow in the end of a bull run, isn't it? Well, typically what happens is there's like cycles. You'll see Bitcoin dominance will grow, and then Bitcoin will top out, and then the altcoin dominance will grow as there's like another leg up, basically. So what happened? Think about it like this. It's very hard to move Bitcoin because the market cap is so large proportionately to the other altcoins. So when Bitcoin breaks out and takes off, it moves up and it moves up big, but shitcoins move up. Well, let's say first, like, let's say there's three classes of cryptos. There's Bitcoin, there's altcoins, and then there's shitcoins. Or like, your big cap Bitcoin, your medium cap, like stuff like Ethereum, Cardano, stuff like that. And then, you're like just random anything from, whatever. I mean, some $1 million to like $100 million or $10 billion or, whatever you want to classify them as. Well, once it's hard for that same money to move Bitcoin any higher and it starts to top out, all they do basically, the whales will just hold the price action. They'll put in a floor so Bitcoin doesn't just sell off and dump. And then they move their money from Bitcoin into the other coins that haven't moved yet. So you'll see things like Cardano and Ethereum, and I would say XRP, but it doesn't ever do anything. Some of the other like bigger cryptos will start moving afterwards. And then when they start putting in like kind of topping patterns or running out of steam or whatever, then you see random shitcoins start to like explode. Like nothing else will be moving. Bitcoin will be going sideways. Ethereum and Cardano and a lot of the other like majors will just be kind of going sideways. And then you'll see just some little altcoin just start popping off and it'll be up like 28% in a day or something like that. And that's just the cycle. So typically that will lead to Bitcoin losing dominance. And then eventually what happens is people stop like, popping off those little like, it's like popcorn. Once the last kernel has popped, then everybody takes their money out of all these shit coins and then moves it back into Bitcoin or sometimes stable coins depending. But that's like sort of like the cycle. And that will happen multiple times through like an actual like 4-year market cycle for crypto. So if we look at, we only have a couple instances of it taking place because Bitcoin's really only been around like, 12 years basically. Like this is our third cycle still playing out right now. So if we look at what happened, the first cycle doesn't have a lot of altcoins, so we can't really tell anything from it. The second cycle was a 2017, 2018 high, which is the most reliable because we had a bunch of altcoins. We can kind of see what took place between Bitcoin dominance, market cap, etc. So we have to just take that limited data point or bit of information, and then we can use that to try to give us a small edge on what's taking place now. And then obviously throughout the cycle, we see a bunch of different situations like that as well. So in my opinion, that's what we've been seeing for the last couple months. Bitcoin topped out. A bunch of money ran into things like, Ethereum and stuff like that. They outperformed Bitcoin. And then we kind of like went sideways on everything. And then after that, well, technically some of those happened at the same time as Bitcoin. Like I think Ethereum topped out right around when Bitcoin did, but Ethereum was moving much faster towards the end. And then once they topped out, we saw things like Solana and Cardano and, name random altcoin as well, putting in new highs throughout that period. But we noticed that like 95% of cryptos did not put in a new all-time high, including Bitcoin. And now here we are in this situation where we start moving up again. And when we look at most of the altcoins, like especially the bigger names, most of them are basically not doing anything. They're underperforming. Bitcoin now started overperforming with this last recent move to the upside. And then there's a couple just like random shit coins here and there that are basically having like overperforming moves, or I'm not even sure. I'm sure something has put in a new all-time high, but that's where, yeah, exactly what you said about, you know, it's the end of the cycle. And then also what Fit Chatter, what is it? Fit Chatter? That's exactly what Fit Chatter is saying. Crypto musical chairs. There's no real new money coming into the space. It's just the money moving around, and the money moving around affects the total market cap, not only the dominance, but also like the actual market cap. Because if something that has a huge supply but a very low dollar cost goes parabolic, it will make the total crypto market cap go up exponentially. Like someone could literally take, you know, 100 Bitcoin, sell those 100 Bitcoin, not going to affect Bitcoin price that much. You know, it maybe drops, you know, a couple $1,000s. So then you multiply that by the total, you know, market cap of Bitcoin, and then that's how much it affects the total market cap. But then all of a sudden something like Solana jumps from $30 up to, you know, $250 or $220 or something like that. Well, Solana's market cap just like 10x. So that little bit of money moving into a smaller coin with more, let's just say more supply, hypothetically, would exponentially affect the total crypto cap. So if, you know, we know Bitcoin has, let's say 21 million, you know, roughly Bitcoin, even though they're not all mined, obviously. So if we say 21 million, well, if we take a random percentage, like somebody sold off that certain X amount of money and it affected Bitcoin's market cap by X thousands of dollars. So it takes basically like, let's say $5,000 off Bitcoin price times 21 million. So that's how much the market cap goes down by in this calculation. And then say they move that same money into some random shitcoin, and let's say that random shitcoin has a 100 million supply instead of 21 million. So the supply is 5 times as much. So that's an exponential factor that's going to affect like total market cap. And then also the price, let's say when they take that same money out of Bitcoin and move it into the shitcoin, it doesn't just move the price by 5% to the downside. You know, it moves it by, let's say 500% to the upside, because the market cap is so much less. So now you have a 500% increase in the price, and then you're also increasing the price of something with 5 times as much total like circulating supply, or total supply rather. So now you have basically a 25 multiplier. It's like 25x the influence on crypto market cap as what you took out to what it made happen when you put it back into that shitcoin. So that's how the numbers can be like extremely skewed. Because the crypto market cap is $2 trillion does not mean that $2 trillion of actual money around the world flowed into crypto. I mean, and then on top of that, when you take things like Tether, well, if you have something like Tether where, you know, and again, we don't have to get into this like serious, super detailed, but if, let's say every Bitcoin that was ever bought was, people bought Tether with it first, well, that let's say $1 trillion is in the total space, and then like it over time appreciated by last price sold, and that made us have a $2 trillion market cap. Well, if $1 trillion flowed into Tether first, Tether then mints $1 trillion. So they have this $1 trillion in cash, and now Tether is $1 trillion, and then they turn that $1 trillion of Tether into Bitcoin and move Bitcoin's price up. And then when somebody goes to sell out of Bitcoin back into Tether or whatever, Tether might mint another, you know, $1 trillion worth of Tether. So like stuff gets counted multiple times that's actually only in there once. So if somebody will like say all of a sudden crypto started crashing and everybody just pulled all their money out of crypto, you know, you would end up with far less than $2 trillion in cash pulled out of a $2 trillion market, because every time the price sells down, the market cap goes down exponentially. And by the end, you know, there's people are getting pennies on the dollar. Something that might have been worth, you know, $50,000 right now, like Bitcoin or whatever, might only the last Bitcoin ever sold might sell for $3, you know? So, but yeah, that's enough of that. Yeah, so I got Shiba for you, honkiness. I will pull that up. I just pulled up, I think it was FTX, or I don't know what has the most history on that. Do not understand you. Vishy says, sir, can you do a little TA on Bitcoin on short time frame, please? Like how short a time frame are you talking about? I did a 4-hour already. If you didn't watch that, go back, check that out. I mean, what do you want to see? 1 hour, 15 minutes, 1 second? And then finally, total market cap suggests money rotating around, not yet fresh money coming in like earlier in the cycle. Correct. Yeah, definitely. And also, you know, like I said, you can put in a new high on total market cap without any new money. To serve more viewers, may need to promote yourself on Twitter. Yeah, I don't use social media, my friend, so that is definitely a, you know, drawback. But honestly, I do this more for my own entertainment and to share my knowledge than like, this is not my career, it's not YouTube. So it's less important to me. And also the toxicity of social media is just, I just have no interest in participating. But I do appreciate it, man. You're more than welcome to share my stuff on Twitter. I mean, I have a pretty big TradingView following, and then obviously, you know, hundreds, thousands of videos, whatever. So a bunch of my own proprietary indicators. So let's take a look at Ethereum next, and we'll keep rolling through. So this is exactly what we're talking about. We put in a top right here on Ethereum back in May, and then obviously we put in a top right here in September, and now we have come up here and we have not taken out that September high, let alone the May high. So what is that telling us? It's telling us there's no, here we had the most money ever in Ethereum. Here we had slightly less money ever in Ethereum. And now here, even after this most recent run, we have less money in Ethereum. So while money is flowing into the space, while Bitcoin broke above this little high right here, Ethereum is currently underperforming. So one of two things is going to happen here. You know, Bitcoin tops out and then Ethereum rolls over as well, or that money later pauses, Bitcoin takes a break, and then a bunch of that money moves out of Bitcoin and then into Ethereum. Ethereum takes out this high and potentially even takes out this high. But most importantly, what we look at is this a musical chairs type situation, like you were saying, or is there actually like value? Are people actually valuing these things more, or are they just trying to make some gains before the cycle ends? So, but right now we see obviously the 200 simple on Ethereum is above the 200 exponential. It is starting to gain back above it, you know, implicating Ethereum might possibly be going back into a legitimate bull run. But at this point in time, you know, basically this is just, it's like a flagging pattern as far as I'm concerned. What we need to be careful with on this Ethereum chart right here that I'm paying attention to is there's obviously multiple ways that this can play out. So what we're paying attention to, we obviously have a high right here. Then we have what amounts to, you know, a low right here, let's say. And now we have a lower high right here. So what we want to pay attention to next is this going to be our low? And then we put in basically, you know, a somewhat symmetrical triangle, you know, which is like neutral to bullish because, you know, we have a flagpole up and then we have a consolidation period and then we continue the bull run. Or is this just our lower high? This is just a reaction rally, something like this. We sell off, we get a reaction rally to a lower high, and then we come down lower. So two things could happen right here. We could come up here and put in a higher low or a lower high right here, and then we're just continuing inside this pattern as it's drawn. And that's perfectly fine. That would still be bullish. But what often happens with these patterns is it will look like that's about to happen, and then we'll put in a lower high, and then this will break down and take out this high right here, and we're in fact in more of a situation like this. So what could happen, hypothetically? Well, we could end up with something a little bit more like this, sort of like a kind of a like channel or descending pattern. You know, we just have to pay attention and wait and see what this does. But as far as I'm concerned for right now, you know, this is what I'm paying attention to. Overall, a bullish pattern. You know, as long as we're putting in higher lows and lower highs, it's still bullish because it tends to favor the direction of the predominant trend, and we're above the 200 exponential and simple. So, you know, and there's many ways that you can calculate the measured move. If we were to break out to a new high, in this case, I would probably use a Fibonacci extension just out of simplicity and accuracy. So that would say that if we went from our top here at like 4,300 to our low right here at 1,700, we would expect at least a 1.236 measure move, which would give us roughly $5,443 Ethereum. You could expect a 1.5, which would give us like 6,900, or as high as the 1.618, which would be 7733. Or, there's a bunch of people that say obviously $10,000 Ethereum. Not really like a fib target specifically. I'm sure we could find something, but it is a nice round number and whatnot. I would think, honestly, that most realistically, that we would probably see 5,000 would be at least like, a short-term top right here or whatever. But realistically, the 1.618 is typically where we top out on things. So I think 77.36. If Bitcoin goes to 70 whatever thousand, like we talked about earlier, I think Ethereum will go to 7,700. I think that's realistic. We do notice, obviously, that Ethereum has been and is still currently like sort of a laggard, as it did not put in a new all-time high. Here was our high, and then it didn't put one in here or here. But overall, still healthy above the 200 exponential and simple. We have green histograms. We're above the red slope line. We're above the zero line. So as soon as we flip this slope back over green, that will look bullish. We obviously got the hard buy signal down here at the bottom. We're inside the bullish control zone, and the Stochs are still angled to the upside. So overall, looks pretty good. What do I look for again? Potential topping patterns, depending on what time frame we're looking at. What I don't like to see happen after a move up like this, I don't want to see a candle like this without a wick at the bottom like that. I don't want to see a close below the previous candle's open, or a bearish engulfing candle. Now, obviously, in this situation, we close below, but we have a pretty big wick on the bottom. So overall, while this is technically a bearish candle because it engulfed the previous candle, the long wick on the bottom implies that it was aggressively selling off and that buyers stepped in and wanted the price to continue to the upside. And then again, we see an aggressive sell-off here, gets bought completely back up, and then we close actually, far above the open. So again, I'm paying attention to what the close looks like on the daily, but as far as I'm concerned, everything but the 200 exponential being above the 200 simple is bullish on Ethereum. So, but it has stayed one of the most bullish for the longest period of time. So now if we look at our ETH to Bitcoin ratio, we see obviously that, let me see, I deleted a lot of my drawing stuff, so we're kind of working with like some kind of bear charts here, but we see we had like a descending channel on Ethereum as it was losing value in comparison to Bitcoin. We got the breakout. We had a measure move of that breakout from the bottom of the channel to the top of the channel. And then obviously we see we've all but met that measure move within a couple percent here, which was basically just confirming we move up here, we put in a lower high, and then we started to sell off again. We started to put in a low, a high, a higher low, and then a higher high. So this is where we were paying attention to the price action here. We did not want to see, and we specifically talked about this, where we got the 821 cross to the downside, save price action right here, and then move to the upside. So when we came back to that line again, now that we have two touch points, when we started to get the potential looking like it was going to cross the downside, we needed to see this area hold right here. It failed to hold. And now we have the 821 cross to the downside. We broke down from a key support, and now we are no longer in a consolidated uptrend right here, because now we have a low, then we have a higher low, and now we have a high here, a high here, and then a higher high, but now we have broken down and closed below that previous low. So that tells us we are no longer in an uptrend on the Ethereum to Bitcoin chart, which obviously if you look at Ethereum, I mean, it moved up a couple percent and Bitcoin moved up, almost 10% yesterday. So, you can just look at the price of the two and see that that's the case. So, and then again, what we're paying attention to again, when the 8 and 21 cross above the 200 exponential and simple, when the 200 exponential crosses above the 200 simple right here, we end up in a massive uptrend. We're now consolidating for month after month. And now here we see for the first time since this trend, the 200 simple is now above the 200 exponential, telling us that while the trend may not be over, and the first time we retest this down here at 0.06, we would expect these 200 moving averages to act as support. What it's telling us, though, is that this trend is weakening to the upside. So what does that say? It says, realistically, Ethereum is probably, well, it is weakening compared to Bitcoin, and it is probably not going to be putting in new highs if the Ethereum to Bitcoin ratio is losing strength. So next we have the FTT token, or FTX. Basically trying to get back above the 821 right here moves up and then fails to get the cross to the upside, and now it's back below them. Again, we see weakness. The 200 simple is above the 200 exponential. So while this one is stronger than most cryptos, because we are still above the 200 simple and 200 exponential, we see a similar situation with Ethereum, where the 200 simple is on top of the 200 exponential. So overall, and then now here, again, we can discuss some of the differences here. Here we put in the all-time high in May, came down, put in our retracement, and then we came and put in a new all-time high here in September. So Bitcoin put in an all-time high back here, and then did not put in a new all-time high here, and then did put in a new high from the previous high here. As where Ethereum put in an all-time high here, and then put in a lower high here, and is currently on a lower high trajectory. FTT put in a high back here, and then a new all-time high here. So this is one of the strongest cryptos because it actually put in an all-time high since Bitcoin did. So that is definitely worth noting and paying attention to. Now, will it underperform going forth? Will it overperform? We'll have to wait and see. But as of now, we basically are just going to look at this pullback for potential targets. And in my opinion, if we take off, and obviously it topped out perfectly at the 1.236, if we take off fib from the bottom right here to our all-time high right here, let's turn that one green. We will see that the initial sell-off came down below the 236, so that's a valid fib target. And then once we came down to the 382 and topped out at the 236, it tells us we put in a high, we put in a low, we put in potentially a lower high, and now we're going to go down to the next viable fib level, which in this case would be the 0.5 in green, the 618 in orange, and then we have both of our 200 exponential and simple moving averages here. So to me, this is a very, very strong zone where I would expect buyers to step in at least for another bounce to potentially just put in another in a series of lower highs. So when we get down here to like $42, I would expect at least to push back up to somewhere around like 49 for a quick scalp. Assuming we just continued in a downtrend, we could potentially even come back up here and just put in a lower high than this. But overall, this is one of the better cryptos that we will look at, relevant like short-term time frames. Shiba Inu, random Shidi coin. I mean Shibi coin. I'm not sure if there's a better chart than this. I'm not really going to look. This is the FTX exchange. But if we just take from the all-time high right here, and then we're just going to fib down to our all-time low right here, we can now look at what's going on. And look at that. Picture fucking perfect. Look at these Fibonacci's in full effect. So we have from our high, let's turn this one yellow, from our high right here to our low right here. So we have an all-time high to all-time low, and we came up, and where did we top out at? We topped out perfectly at the 886, literally to the wick, and now we are selling back down. So what would I expect to happen right here? Well, I would expect one of two things. If we take out the, typically, when you take out the 786, you might see resistance at the 886, but you're at least going to retest the top, typically. But we have to pay attention, because if we top out at the 886 and then we get our daily candle close below the 786, I would expect that that was just a little extra squeeze, and then it's going to pull back down. Now, where's it going to pull back down to? Well, probably one of these Fibonacci levels. We'll have to wait and see. Again, there's not a lot of technical analysis you can do on something like this. Based on these moves down here, we can go from where we put in our low right here, that's our low right there, and then we can go to our high right here, so that Fibonacci, and then see where the pullback was to, and then we basically take, I don't really care obviously because that's already taken place, but if we take from that top right here and then we put it to our bottom right here, that will give us our Fibonacci extensions to the upside, which the longest one I normally look at is 4.236, and obviously in this case it massively overshot that. I don't know, I'm not even going to pay attention because it's like such fractions of pennies. But typically, we would expect it to top out based on one of these like Fibonacci extensions. In this case, it went sideways and did nothing for so long that now the move is so violent. Same way that it sold off from here. I mean, how much of its value did it lose? I mean, yeah, it went down like 87% in the middle of a bull run. But now, I mean, I don't even know. It's probably up, at least a few 100%, I would imagine, right here. 600% from the all-time low to the all-time high. So you definitely could make some money on this thing for sure. But at this point in time, looks to me like it probably topped out. Now, if it comes back up here and takes out that all-time high, then we can look at the relevant Fibonacci extension for the entire move, which would take us up to, oh, you're really killing me on this one. Take us up to 0.00004993 pennies. So it's like the little bit of copper that rubs off your finger when you touch a penny is what this would be worth. But these Fibonacci extensions are where I would expect it to top out. I would expect the initial resistance at the 1 and then the 1.236. The 1.382 is not that relevant. 1.5 is much more relevant, which would be 6 whatevers of a penny. And then the 1.618 is typically where we top out at, which is 67 or 6.7 blah blah blahs of a penny. 4 zeros before that. So not 674. If this thing would just go to a penny, it'd be much easier. So I'm pulling for you on that one. It's much easier to look at without, 4 zeros in front of it. So, but that's what I would be paying attention for. Obviously, this is a totally useless shitcoin, but does not mean you can't make some money trading it. And then obviously everything is completely bullish. It hasn't even existed long enough to have a 200 moving average. So, yeah. Chainlink next. Okay, so let's look at Link here. So we put in our high here in May. We put in a lower high here, and then we've got barely any move. And now most importantly, 200 simple is above the 200 exponential. We were unable to get back above the 200 simple right here, and we have lost the slope on the 200 simple. We're just basically oscillating between those two. So if it gets a break to the upside, anything above $27 will look bullish, and it will look like a low, a high, a higher low, and then I would expect us to potentially put in a higher high within this move. But anything lower than 25, it's going to look like this is completely done and going to be selling off. So, we can obviously pay attention to those as well as our Fibonacci levels. There's a strong resistance here because of how long we oscillated. But the truth is, this thing is basically just waiting for the market to tell it what to do. It's no longer in style. Like, that's what's happening. A lot of these cryptos are just not cool anymore, so people aren't paying attention to them. But a move to the upside, I would imagine $31 would be our initial target, then $22.50. Another push to the downside, $18.50, and then obviously we have that resistance at $35. But at this point in time, this looks bearish to me. The fact that it's underperforming almost everything else in the market, and I can't even say almost everything else because a lot of stuff looks like that. FTM. Again, we spoke about this one last time. This is one of the most bullish cryptos. It does not have a ton of time that we can look at it, but it never even crossed the 821 back to the downside. So we're back here revisiting the close daily all-time highs. As far as I'm concerned, a close above $1.64 is a blue sky breakout, and I would just expect this to go parabolic. Just because there would be no reason, assuming that this is the full history of it, which I think it is. Once we're at all-time highs, there's no reason for anyone to sell this because everyone's in profit. So I would think a 1.236 extension, 226. Then after that, we'll skip the 1.382. The 1.5 would be $2.75. And then the 1.618 would be roughly $3. So that's what I would be expecting, basically, one of those to take place. So if we do close above this right here, I would be paying attention to very clearly a top around, I would say probably between the 1.5 and the 1.618 is where I would expect this to top out at. That's the best way to look at it, in my opinion. But again, we don't have a ton of history. There's not some clear, concise pattern that we can use right here. You could argue we had some kind of descending broadening wedge. You could say we were inside of some sort of sideways consolidation, but there's nothing extremely useful that we could look at, or reliable, I should say. So now let's look at Solana. So Solana looks similar, but let's pay attention to the differences here. Again, we have limited, time that we can look at, but we see that here it was slightly less bullish because the 821 actually crossed to the downside, as where it did not on, what were we just looking at, FTM. So this is slightly less bullish. And then when we came up here to this little micro high right here, we technically took out the high and closed above it, but we did not take out the all-time high. So this one put in a high here. This was much later than the rest of the crypto market did. Most of the crypto market had already topped out back in what, May or whatever. Yeah, I don't know. I'm probably on the wrong chart for this one. But it was a lower high, and then this one ran up like massively, which obviously we got bullish on Solana at like $40. Something like that. I think it was like 39 or 42. But you know, it was obvious that it was topping out here based on Fibonacci extensions again, from like the high to low back here. So now on the pullback from the high here to the low here, we came back up to the 618 and topped out. We're now in between the 8 and 21. So what we need to pay attention to is we have a low here, we have a higher low here. We want to make sure that this puts in a higher low here, because then it's going to look like a low, a high, a higher low, a higher high, a higher low, and then we would expect once again a higher high. So, you know, at that point in time, I would start looking at something like, you know, some type of, you know, channel type situation playing out, something like this is what I would really be paying attention to. So again, this reminds us of that Ethereum chart we were looking at not too long ago, where we have put in basically a bottom and then a bottom again. We have a high and then a high again. What we want to see right here is when this 8 and 21 come down here, we want to see this area act as support. Basically where we're at, somewhere around like 148. If this fails to act as support, the 821 are going to cross and we're going to get a breakdown. And the breakdown is probably going to amount to, you know, the distance from the top of the channel to the bottom of the channel. So it's going to be a violent breakdown, obviously, on this. And considering the massive move that it had, coming down to $109 is not that unrealistic. But at that point in time, we'll have put in a high, then a low, then a lower high, and then we'll have a lower low as well. So that's going to tell us this is in a like elongated, like downward correction pattern, and that maybe this was an A, that was a B, and then wherever this bottoms is a C, and then it can start continuing to the upside. But again, we have to wait and see as this develops. But overall, this one is more bullish than many, but not looking great right now. Uniswap is next. Uni, obviously a high, and then we put in our series of lows, and then we put in like a double top lower high right here, and now again, we're not even close to that high right here. So while Bitcoin has taken out that high, many of the altcoins are underperforming because they're just not cool anymore. You know, they were cool last year. Their junior year now, they're just not cool anymore. They got too many pimples or whatever the deal is. Fell out of style. Maybe banged an ugly girl. I don't know what the deal is. I'm not sure why Uni is not loved by many. But probably the fees, honestly. But right now, 200 simple is above the 200 exponential. It's got a negative slope line. We're barely above the 200 exponential right here. Basically just oscillating between the two. So until we get a break in one direction or the other, this still looks bearish to me because the 200 simple is above the 200 exponential. But if we do get a break above 2667, we'll probably come back up at least to $31, if not to retest the highs. If we get a breakdown below $23, we're probably going to come down somewhere around like 19, potentially even sweep the lows at like 1450. So again, not that great looking in comparison to many of the other cryptos. XRP, we put in the high, we put in the low, we put in a lower high. We're bouncing still above the 200 exponential and simple, so it's not looking terrible. The 200 exponential is still below the 200 simple, so we're not particularly bullish on it. The 8 and 21 have crossed to the upside and we're above those, so that is good. The problem with XRP is that it has still not put in a new cycle high. So this was back in 2017, 2018. It topped out, went through a bear market, and then had all this bull market to come up here and still has not taken out the high. So this, as far as I'm concerned, is extremely bearish. Like 95% of all other cryptos were either invented since this happened or came up and put in a new all-time high. So with the exception of like, I mean, there's quite a few, but like XRP looks absolutely terrible in my opinion because it didn't put a new all-time high. Litecoin has like the same high as its previous bull run, so that looks terrible. Dash is far off of its all-time high, so that's a total piece of shit. There's lots of them like that, but overall, XRP does not look good. Does not look good. And as far as I'm concerned, XRP is like an hourglass that has been flipped over and there's only a couple grains of sand left. Depending when this bull run tops out, you know, end of year based on previous cycles, maybe sometime into January or whatever, maybe it already has topped out. But regardless, this thing is literally a ticking time bomb before it goes in the wrong direction for anyone that likes XRP. Dogecoin obviously put in a massive new all-time high, but now it has broken below the 200 exponential and simple, came back up to the 200 simple and could not get above it. So while it does have the 821 cross to the upside, it is above the 200 exponential. It does still have positive slope on both of them. It's right now just oscillating. I mean, Dogecoin is pretty much dead. Like, why buy Dogecoin when you can buy Shiba Inu or whatever? I mean, it's like the next best, the new cool coin on the block. So as far as I'm concerned, Dogecoin looks okay. It's still between the 200 exponential and simple, but no one's even paying attention to it. No one cares. ADA, Cardano, above the 200 exponential and simple. The 200 exponential crossed back above the 200 simple. It put in a new all-time high since the previous all-time high in May, back here in September. So one of the most bullish cryptos. Unfortunately, since then, it has just been putting in a series of lower highs. So at this point in time, it's probably one of the most bullish, but it does look to me like Cardano is probably going to sweep these lows at like probably coming down to $2. If that holds, that's great. If not, it will probably be about $1.69. I would imagine, and that's the 618 of the move from the low after our initial peak to the high from our most recent peak. So that lines up perfectly with the 200 exponential and simple and the 618. So that seems a very, very likely place that buyers would step in and scoop this back up. At that point in time, I would expect it to, put in a lower high somewhere, assuming we don't go into like a massively bullish run after that. So Cardano beads, Polkadot. So Dot, again, not a ton of stuff we can look at here, but it put in its high in September, all-time high. That is good. Obviously sold off, put in a lower high, and then came back down, revisited the lows here. Same low, double bottom, came up, and now it has not been able to take out this high right here. So if it takes out the $33.50 mark, I would expect it to just pop up to previous all-time highs. So I would expect like $38. If it breaks down from this area here and cannot hold, this is obviously a very strong resistance right here, as we have basically, 7 days, an entire week. It could not break through $32, and every break above it was a rejection. So I think realistically, this thing is basically like range bound between, what amounts to like this high right here or the 618, depending on how you're looking at it. This is the area I would want to see it break above. I really would want to see it break above that area. That would give me some like hope that this thing could move to the upside. But as far as the downside, I would really be paying attention to this area right here. So as far as I'm concerned, we're basically just range bound between $32 and $26.30. So more likely than not, what's going to happen right here, it's probably going to come back down and revisit the lows. But if it finds a bottom slightly higher, like $28 or something, it will look slightly more bullish. If it comes out here and breaks out the bottom, starts retesting these lows, it's going to look extremely bearish. But overall, it's not really doing anything. Basic attention token looks weak. 200 simple above the 200 exponential. Came back up here. It did get the 821 cross to the upside. It is trying to regain the 200 exponential. We have a current trade setup on this one. It's basically at the entry still, underperforming. I was hoping that some of these altcoins were going to perform, but instead Bitcoin overperformed and all the altcoins underperformed. If this area holds at the 382 and we do get a retest of the 0.5 and the 200 simple, that would be a 16% move to the upside with a 5% stop loss, essentially breaking down from this little cluster of support right here. And then I would expect it to retest like the 236. So, obviously if it breaks down from here, I want to be out of the trade. If it breaks up from here, I will capitalize on 16% move to the upside. It does look like it's gaining momentum. Most importantly, the 8 and 21 are across to the upside. We're seeing some green right here, and it is slightly holding the 200 exponential for now. So this should act as a strong support. We have a hard buy signal coming out of the bearish control zone. We have a bunch of green histograms crossing over the zero and looking like it's about to attempt to cross the slope line. These are the best kind of trades for me. We have a very definable area that we want to take a stop loss. We have a very definable area that we would expect price action to move to the upside. So the 0.5 and the 200 simple are very clear resistance above our head. The 382 and then also a breakdown below the 200 exponential, the 821 cross, and then these previous candles here as well very clearly has broken down, and we were wrong. This is not going to move bullish. And then we also get roughly 3-to-1 risk reward. So we flip a coin on this. If we're right, we get $3. If we're wrong, we lose $1. And then multiply that by, however many thousands of dollars you're going to take on this trade setup. And that's how I like to make my trades. Very clear, definable. If I'm right, it goes to here. If I'm wrong, it breaks down below here and I'm done with it. And then I benefit exponentially more if I'm right than if I lose if I'm wrong. So, but there you have it on basic attention token. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Matic is next. Matic basically put in its high back in May, put in a lower high here in September, and is now underperforming. One thing I do like about Matic is it trades extremely technically. From the high right here to the low right here, it topped out perfectly at the 618. We see prior to that happening, we saw quite a bit of resistance at the 382, and then when it broke down, we broke down basically at that 382 again, and it acted as support and resistance. Now we came up perfectly to the 0.5, so we came up to the 618, then we came down to the 382, then we came back to the 0.5. So if we continue this micro downtrend, I would expect it to break down to the 236. If we're able to save this 821 and move back to the upside, I would expect it to retest the 618 and potentially take that out and come back up to the 786. So again, 26% to the upside, 6.6% to the downside. Basically, and then potentially for the bigger trade, 69% to the upside, 19% to the downside if we took out the lows right here. Again, over, 4-to-1 risk reward ratio and 3.6-to-1 risk reward ratio. But overall, doesn't look particularly great right now. We broke down from the 821. It's holding as of now, but we'll have to see what happens on this one. Definitely looking weak, in my opinion. But trading very technically, which is always nice because it makes our job so much easier. Coinbase, here's our crypto meme stocks, our crypto actual stocks. From the high to the low, lower highs consistently throughout the range. We did get back above the 821. It's trying to cross back to the upside. We have a hard buy coming out of the bearish control zone. We have multiple green histograms. Looks like we're about to confirm this cross right here, at which point in time, we could expect basically a retest of some of these key Fibonacci levels. Potentially, that's the one I want. Potentially, let's see, when we came back up from the high to the low right here, the initial bounce took us up to the 0.5 right here in red. And then we came back down to put in, basically a series of higher lows. We have a low back here, higher low, same low, higher low. So overall, I would say it's in a, inside of a downtrend. It's in a macro uptrend, trading fairly technically as well, or a micro uptrend rather. I would expect what's going to happen here is it's going to come back up and either we have a high here at 282. We have a slightly lower high here at 278. So we'll have to see. I think it's going to run into some trouble at 257, potentially 270. But if it breaks above there, I would expect it to come back up to like 296 or potentially as high as 326. But again, we'll have plenty of time to determine that as we go. Overall, Coinbase has just, why would you ever buy Coinbase when you could have just bought like any crypto, including Bitcoin? This thing has literally only gone down since its inception. So Robinhood looks like trash. Didn't even get the cross back up above the 821 right here. Now it's getting the hard sell signal. So it basically got the hard buy signal coming out of the bearish control zone. Did almost nothing and failed. And now it's rolling back over. This really looks like, really does not look good. It looks like it wants to break down from the 786 and retest the 886. High, low, lower high, lower low, lower high. So it looks like we're probably going to put in a lower low. So I would expect Robinhood at like 36 bucks. At 36, do people step in and buy again? Do people like Robinhood? I don't know. Do people like Robinhood? I feel like they don't. But people are also stupid, so they probably will buy it. And there's definitely a scalp to be had there as well. So MicroStrategy, again, same thing. You're just so much better off buying crypto. You're just so much better off buying Bitcoin. Off of that move right there, it did an 18% move, and Bitcoin did substantially more than that. Maybe not substantially more. I think closer to like 25 or something like that. 200 simple is above the 200 exponential. We are above both of them now. It does look like it's about to get the 821 cross to the upside. We have a high, we have a low, we have a lower high. So we need to pay attention now. We have a higher low potentially here. So the real area to watch is 797. So a break above 800 will probably, it will look good. A break above 800 will look good. Yeah, that chart's got too much going on, and I really don't care about MicroStrategy. So, Bed Bath & Beyond obviously got absolutely rectally destroyed, and is still getting destroyed. Anybody that bought the dip is just going further and further underwater because the dip is continuing to dip. Where would I expect this to find support at? Man, I mean, there's quite a bit of price action along the way. I would expect like $10 to act as a serious, strong support. There's probably a couple steps along the way, though. If we look at, from the bottom to the top, we're almost at the 0.5 at like 1367. After that, that's like our $10 range. So maybe bounces right here. I mean, this is a pretty serious breakaway gap as of now. But maybe there'll be a trade set up from the 0.5 to come back up to like $22. I don't know. We'll see. I mean, because honestly, earnings is... Okay, so yeah, this was at the previous earnings call right here. So we've got a while before we have to worry about that. This is probably going to come down to the 618, but there's definitely a potential. If it looks like it's bottoming out at the 0.5, there's something there, but this thing is basically just meme stock territory at this point in time, even though it is technically a real company. GameStop, GME. Again, 200 simple has crossed above the 200 exponential, so not particularly great. Looks like it's losing strength after basically topping out and just putting in a series of lower highs. 821 crossed the downside. Looks bad. It's in the bearish control zone. We're below the slope line. It is still blue, but all red histograms. This looks very weak. We have pretty solid support. I mean, the 200 exponential and simple should act as support. We have not tagged them yet. So the first time we touch the 200 exponential and simple, like roughly 155, we should see some kind of bounce. What that bounce does is going to tell us how people feel about GameStop. But I think realistically, 134 is the area to watch. That was our bottom, multiple times. So that's really what we're paying attention to. But overall, GameStop does not look good. The old game stonkaroos not doing much here. AMC. Again, high, low, lower, high. Probably, I mean, it really looks like it's coming down here to revisit the lows again. Below the 821 in the bearish control zone. It is trying to come back up here, exit the bearish control zone, and get a cross of the stochastics. But until that happens, this thing just is getting hardcore rejected. It looks terrible. It looks terrible. It's still on top of the 200 exponential and simple. 200 exponential is still above the 200 simple. So honestly, looks better than most of the charts that we've looked at and will look at today. But that's really just because of the velocity of the short squeeze to begin with. The actual company is total trash. Obviously, movie theaters are total trash. No matter what the media tells you, movie theaters are dead. It's an actual fact. We have our low right here, that 0. That's where I expect it to come down to. When does it go there? I don't know. We can borrow our little box from over here. And that's where I expect it to go to. That's the 200 exponential, potentially 200 simple, depending when we get there. And then it's also the previous low of that wick right there. It looks very likely coming down to high 20s, low 30s. At which point in time, who knows? But it's really just looking like a giant descending triangle. I mean, this was our initial triangle that we drew. We got the break measured move to the 618, and now it looks like it's failing to put in any kind of bullishness. So at this point in time, again, it just looks like a high, a low, and then a series of, basically bottoms here. So it looks like a giant descending triangle, which, eventually typically breaks to the downside. Now, can the cult hold this up? Can the cult break it out to the upside? I don't know, guys. Be stronger if you're one of those AMC guys. Get all your little monkey friends together. Get your little primate buddies and start buying them AMC calls. What y'all thinking? What are you doing? Newegg, again, still looks absolutely terrible. Finally hit our target to the downside, but it is Struggleville. initial target was a 200 exponential, broke down from that 200 simple, getting rejected below the 8 and 21. 200 exponential is rolling over. You know, we've been talking about this thing just getting crushed the whole time. It looks to me like it's coming down here. We have a very strong support right here, which is, you know, basically where we're at right now. I would expect now it to act as resistance as it did back here, and I really think we're coming down to $10.79. So, you know, took us a little while to get there, but I think that's where we're going. And at that point in time, I mean, you know, this is an actual company too. I've bought things from this company in the last like 2 years. It's not like GameStop where you're just like surprised it even still exists. And then last but not least, for the meme stock slash cryptos, we got our DraftKings, little gambleaholics. Looks bad. Broke down below the 200 exponential and the 200 simple, but in the other order, I pointed at the wrong ones. Both now have a negative slope to the downside. It did do that here and then move back to the upside, but just put in a lower high. So at this point in time, I would expect it to continue to do the same thing. The more times it gets down below here and puts in a lower high, the less likely it is to break out to the upside. Looks very weak. It is, however, in the bearish control zone, and the Stochs are trying to move back to the upside. So there's definitely a possibility we get another pushback up. But again, I would just expect it to continue putting in lower highs and selling off. We do have 2 green histograms. We do have a potential cross on the stochastics here. But as far as I'm concerned, we're below the 8. We're below the 21. We're below the 200. We're below the 200 simple. It looks bad. It looks like it wants to continue to the downside. Now, on a positive note, though, we do have... Oh, it's like I already drew this chart. We do have a low down here. We have a higher low right here. And then our next target would be, you know, basically just a third higher low. At which point in time, you know, you could argue that this little micro uptrend is still in play. So, you know, something like that with basically just a failed breakout on the upside, which is what I talked about. Before this breakout happened, I told you I expected this to have a failed breakout, which it did make it to the 786, which isn't terrible, but it missed the measure move substantially, which is what you would expect to happen on a break of a channel like this. So, but we'll have to wait and see. But more realistically than not, we're coming down here to this 236. I mean, it's almost there at this point in time. So, you know, we've all but hit it. It's just a matter of when and if it gets that extra little push down. But that's where I expect it to go. But, you know, honestly, at that point in time, I think this will be a buying opportunity, at least for a retest back to the 200 exponential and simple. Will I take this trade? No, but I'm not particularly bullish on DraftKings. But realistically, you know, it could be looking at like an 11 to 15% move to the upside. You know, and I say, will I take this trade? No, for now. Who knows? In the future, maybe I will. If it starts looking good, if stuff's lining up, you know, there's definitely a possibility. But I'm careful about anything that like Cathie Wood got behind, just because I think we're going to see massive outflows from her funds, and she's going to be forced to sell a lot of things. So 17% to the upside, 5% to the downside. So still like a 3-to-1 risk reward ratio, but it is below the 200 exponential and simple with a negative slope on both. So not particularly great. That's our cryptos. I'm going to jump back into chat here, and then we will proceed with our traditional markets. What is going on, everyone? If you're just jumping in, make sure you give us a like and subscribe, all that good stuff. Good to see everyone active in chat. As I say that, no one has spoken for a couple minutes, so quick little checkup. I'm going to grab a quick drink here, or take a quick drink here. If you're in the chat, sound off, say what's up. Make sure you give us a like and a thumbs up. Smash up that likey like. Smash the likey to the up hand side. So let's take a look at our 10-year treasury yields. And just a reminder for those just tuning in, and also for our excerpts later on, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. 10-year yield. This is our treasury yield on the bond notes, etc. Again, we are above the 200 simple. We're above the 200 exponential. You know, this to me looks like the beginning of an uptrend. We basically flipped over from a long-term downtrend that has lasted for years. We got back on top of the 200 exponential and simple, got the slope to the upside, had a nice move to the upside, came back down, got a retrace to our, I'm going to put on the drawing tools for a second, bear with me, to our 0.5, which is from the top back here in 2018 to the bottom right here in March 2020. And then we came back up basically on that move, put in a high, and then came down and retraced. Came up slightly above the 618 and then came back down and found support on the 0.5. It is possible we just put in a lower high here and then come back down to the 382. But as of now, because we are now on top of the 200 exponential and simple with a slope to the upside, it looks overall good. But again, we do have to be careful because the 200 simple is above the 200 exponential. If we stay above them both long enough, if we basically stay above 1.39 on the yield long enough, you know, the 200 exponential will move back up. But as of now, we have to be careful that we don't just put in a lower high and then sell off. But if we look at our monthly chart here, we will see what I'm expecting to happen is basically we've got the 821 cross right here. We closed the month back on top of it. I am expecting a measured move to play out and a push back up, a reversion to the mean, a retest of the 200 exponential and simple, and then rejection back to the downside. So. But if we put our drawing tools back on, I'm going to turn off our moving averages, and then we'll just take a quick look at what's playing out right here. We basically had our sell-off right here, and then bottom out, and that put in a rounding pattern right here. This is our basically like a teacup or cup and handle pattern developing. We came up and put in our high right here. After our channel breakout, we have basically an ascending channel. We ended up breaking to the upside. Topped out here slightly afterwards, got the measure move of the channel in blue, and then we topped out at the neckline of the teacup, started to put in a descending triangle, basically had a measure move breakdown of our descending triangle here. That started us off into our descending channel. We basically came down perfectly to our 0.5 Fibonacci and our target, hit our target perfectly, came down, double bottomed, and then we started to form an ascending triangle, which is a bullish pattern. We then broke out of our descending channel and our ascending triangle, and we have all but hit the measure move of those two breakouts. And we all know that, and if you don't know, now you know, that for a cup and handle like this, typically what happens is you put in a rounding bottom to a neckline, you then enter into a descending channel. When you break through the descending channel, you fill out the remainder of the handle itself, and then eventually when we get back up to the neckline of the pattern right here, or the top of the cup, a breakout measured move of that pattern is from the bottom of the pattern to that neckline break, which would give us our measured move right here from the bottom to the top, and that would take us up to our top right here at 3%. So I expect these to get up to 3% eventually, and then if we just flip back over to our monthly chart here, we can see that that measure move 3% actually takes us back up to the top of this long-term pattern that we've been inside of for like 40 years, and then also just so happens to line up absolutely perfectly with the reversion to the mean retest of the 200 exponential and simple. So maybe it's just a coincidence that literally everything on our chart perfectly points to the exact same spot, but I highly doubt it. I think it's very likely that we are going to 3%. When is that going to happen? Probably over the next couple of years, but who knows? TLT. So yeah, this is like the opposite chart. Obviously, this is our actual 10-year treasuries. We were in a long-term bullish trend here. We sold off and basically put in a retracement, came back above, tried to save the trend right here. So this is the opposite. We're in a bull trend, and then it flips over bearish, and then we break back above the bull trend, but it won't hold, and then we break back down. So now we would expect to see continuation to the downside. So we never actually flipped the 200 simple back bullish, and we only flipped the 200 exponential bullish for a short period of time, and then it actually flipped back over bearish again. So now both of these are bearish. We're below the 8, we're below the 21, we're below both the 200 exponential and simple, and their slope to the downside. We're inside the bearish control zone. The slope line is red on the TJD TDMACD, and all of the histograms are red, and we're below the zero line. Literally everything on the daily for this chart is bearish. Bonds are extremely bearish right now. And then if we look at our monthly chart, I'm just skipping over the weekly to make them quick. We'll see basically what happened here was we went into a parabolic uptrend in green right here. We broke down, and then we tried to save the trend. We tried to move back to the upside, and that has failed. And now we would expect continuation to the downside to either retest the lows or come down to retest the 200 exponential and simple. And we'll notice also that what we see here, it's not really a cup and handle in the same way, but what we see here is a head and shoulders pattern. We have a very clear neckline here at 134. We have a left shoulder. We have the neckline. We have a head. we have the neckline, we have the right shoulder, and now we have the neckline. And anyone that's been watching the channel has known that I drew this in far before it ever happened, as it looked very likely that was what's going to happen. So when we do come down to the neckline, that is also going to be the heart line of our channel that has been in place for like, you know, essentially like the 40-year uptrend in bonds. And then also we have like a parabolic ascending support line here in green. So essentially I'm expecting somewhere around that range down here, at which point in time we could potentially break. I would expect at least temporary support, but overall bearish on bonds. Not to mention what's going to happen. Well, look, this was our top right here. And then this whole time bonds have been going down after going up for, you know, basically a 40-year period in bonds since like the 1980s. Bonds have been bullish. And now we're putting in a topping pattern at a parabolic uptrend high. And now this is all taking place while the Federal Reserve is buying $80 billion a month in bonds. So they're going to start buying bonds slower. So they're going to buy less and less bonds. So that's bearish, pointing to the downside. Eventually, they're going to decrease their balance sheet. So they're going to sell some of the bonds that they're not buying anymore. So that's double bearish. And then eventually interest rates are going to rise, or Fed funds rate, aka like the yield corresponding to the actual bonds will rise accordingly. So again, that is triple bearish because the yield is inverse to the actual bond price. So there's three very strong bearish like headwinds pushing bonds potentially to the downside. So, you know, we'll see how that all works out though. But that is what I'm expecting to happen. And obviously it is playing out perfectly. That is one thing I love about these markets, and my trading style is we literally do the same thing over and over again. Give me a chart, don't even need to know what it is, and we can walk through and I can tell you exactly why I'm thinking the way I'm thinking without my own bias getting in the way. So VIX Volatility Index, we obviously have a very long sideways channel we operate inside of. Inside of that we have an ascending descending channel, and now here we are at the neutral zone. Right here is the neutral zone, basically the 200 exponential and simple. We have the heart line of the descending channel. We have the heart line of the sideways channel, and anywhere between, basically 19 and 21 is just considered neutral to me. So, your guess is as good as mine. What's going to happen next? You could argue that the stock market's going to sell off and the VIX is going to go through the roof. The chart's not telling us anything. Nothing bullish, nothing bearish. So. U.S. oil broke out to new all-time highs. What do we expect after a breakout? A retest of the breakout, which was this not all-time highs, cycle highs, I'm sorry. Retest of the breakout, which also lines up with the 8 moving average. And then if that holds, we would expect continuation to the upside. So that's what I'm looking at. We're inside the bullish control zone, starting to weaken here. We are above the blue slope line, all green histograms, but now we're showing 2 red histograms. So starting to look a little toppy. Definitely starting to look a little toppy. Have to be careful in this area. Damn it, I forgot to turn it off. All right, let's go back here again. I hate this stupid chart. Because of that crazy wick, it annoys me. So yeah, here we have reclaimed. Basically, yeah, looking at the long-term time frame, we've obviously been in a steady uptrend for all of existence. Topped out back here in 2008, and then we broke down below the 200 exponential, and now here we broke down below the 200 simple in 2015, retested as resistance, failed, went to zero, oil went bankrupt, and then now here we are breaking out from the high from 2018. So a breakout from the high from 2018, back above the 200 exponential, back above the 200 simple. So while the 200 simple is still above the 200 exponential, it looks like, much like Bitcoin, we are now attempting to come back up here and retest the previous all-time highs. I will not be fully bullish on this until the 200 exponential is above the 200 simple, but since we're looking at a monthly chart, that might take years to happen. In the meantime, though, most everything is pointing us bullish. We're in the bullish control zone. We have a bunch of green histograms. We have a blue slope line. The 8 and 21 are across the upside. We're above the 200 exponential. We're above the 200 simple, and they all have positive slopes. So at this point in time, while we're running into some resistance, unlike Cathie Wood, I actually use my brain, and I am very bullish on oil and have been very bullish on oil. I expect oil, my last target was $80, which we hit, so check. And my next target is $100, which we are probably headed up to very soon. We'll see how the OPEC meeting coming up goes. You know, obviously there's a lot of things going on, but it would not surprise me to see things like, you know, oil, coal, natural gas, many of these other things continue in very powerful uptrends. So obviously, you know, it's nice when your narrative doesn't change, because you only have to change it when you're proven wrong, rather than just like flip-flopping every day like most people do. So Dow Jones obviously had a nice strong day today. This tells me literally nothing. On the daily, 200 simple has crossed above the 200 exponential, telling us we're losing trend for the first time since we crossed back above them to begin with. So here we had the 200 exponential above the 200 simple. We broke down from them. We started selling off violently, obviously, and then the 200 exponential was below the 200 simple. Once the 200 exponential crossed above the 200 simple and both had a blue slope line, we went into a parabolic uptrend for a long time, and now here at the top of the trend, the 200 simple is above the 200 exponential, telling us we are losing strength on this trend. So while we could still put in new all-time highs, and it would not be surprising, we are very, very cautious in this market, as essentially at this point in time, we have all but wiped out, you know, when we came down here, you know, basically every one of these sell-offs for like the last week or so has wiped out the gains on the Dow back to April. So, you know, we're basically just going sideways at the top of the range. This starts looking a lot like distribution to me at this point in time. Also, there's potential for, you know, like a left shoulder, neckline, head, neckline, right shoulder, you know, and then a breakdown of like a macro head and shoulders pattern. We got to be real careful with this one, you know, really with all these markets. And then obviously, this is what we're paying attention to on the weekly. We are below the 8. We are below the 21, and they are tightening, telling us that if we stay here long enough, much like we went into a bull trend back here in June of 2020, we are about to go back into a bear trend, at which point in time I would retest the previous all-time high at 30,000 or reversion to the mean 200 exponential and simple somewhere around like 28,000. We have all red histograms on the weekly with the exception of this little guy right here. We have a red slope line. We have a hard sell signal coming out of the bullish control zone. This right here looks like a topping pattern. It looks like distribution is taking place. It takes a long time for big positions to get sold, especially on stuff like these indexes or throughout these different assets. So, you know, how much longer is it going to take? Probably a little while, but I wouldn't want to be partaking when the floor falls out of this one. But still possible we can move to the upside. But, you know, right now it looks bearish. And we also have some bearish divergence as well. S&P has crossed 821 to the downside, headed down to the 200 exponential and simple. 200 simple has crossed to the upside above the 200 exponential for the first time. Again, let's flip over to the weekly. And now we see we are below the 8. We are slightly above the 21. So this is slightly stronger than the Dow. We have lost the slope on the TJD, TDMACD, bunch of red histograms, bearish control zone, hard sell signal. Again, looks very weak. If we break down from this area, we could go as low as 337 or 3,370, depending on, you know, which S&P you're looking at. That would also line up almost perfectly with the 200 exponential and simple. So I would not mark that out just yet. We do also have bearish divergence from some of these various points along the way. So it would not surprise me to see a violent sell-off in the future for the traditional American United States of America stock market indexes / the whole stock market. IXIC, NASDAQ, again, looks weak. Broke down, 821 across the downside, 200 simple above the 200 exponential. We're in the bearish control zone. It looks like we're very likely, you know, at this point in time, what did we do? We came down to support, top, support, lower high, broke down from support. We're retesting support as resistance. We need to get above this resistance right here, or else we're going to get the measure move to the downside or continuation to the downside. Could this again turn into something like a little, you know, head and shoulders pattern, some kind of topping pattern? For sure, we have quite a bit of support right around this area as well, 200 exponential and simple, but, you know, definitely looking weak, looking toppy. Again, below the 200 or the 8 and the 21, trying to save price action, hard sell, left the bullish control zone, bearish divergence between our top here and our top here, our top here and our top here, our top here and our lower top here, red slope line, bunch of red histograms, more red histograms than green histograms, even as price action moves to the upside. Looks very bearish. 11,738. Retest these previous highs right here. If we break down, we should see some strong support at 14,000. But macro, could retest the 200 exponential and simple. This is our reversion to the mean retest of the 200 exponential and simple. And I'm going to tell you right now, if the NASDAQ goes down to 10,000, people are going to be losing their minds. Losing their minds. So, and I would not rule it out. I'm not saying it has to happen, but the chart is sure telling us that we are weakening at the top of a long trend. The old Ruddy, the Russell, the Ruddy 2K, Russell 2000, been literally going sideways at this point in time for a year. This is the entire year we have done nothing but go sideways. The 200 simple is well above the 200 exponential. We are technically below the 200 simple, and now we have the heart line of the channel and the 200 simple above our heads. So more likely than not, we're coming down to the 200 exponential. We have not touched the 200 exponential, the light blue here, yet. So the first time we come down and touch it, I would expect it to act as support. The reaction rally that we get off of that is going to tell us what we're paying attention to. But more likely than not, this has acted as support every time we've touched it. This has acted as resistance every time we touched it. So having the 200 exponential and this support right here, that would most likely act as support, at least for a retest back to the heart line, which is basically where we're at now. But again, does not look good. And matter of fact, I believe this week, this week, we are now below the 8 and 21 right here. And if we close just right now, or really just anywhere below 2,229, the 8 and 21 will cross to the downside and turn red. When they cross to the upside, we were at 1,370. Now we're at 2,231. So we basically had over a year uptrend, and now we've gone sideways so long, we're about to get a downtrend starting. And if we do, again, the previous all-time high and the 200 exponential and simple line up almost perfectly right around 1,700. So, the more things, the more confluence, the more things telling us the same area is an area of interest, the more likely we are to hit that area. And again, I haven't been drawing fibs on all these just because it's so early to start doing. But if we bust out a fib from the bottom here to the top right here, we'll notice that a 382 retest on the fib lines up perfectly with the previous all-time high, and then also the 200 exponential and simple. So not unrealistic to think that we're going to be coming down to some of those levels. And what is that going to look like for the world, for the stock market, for investors? I mean, you tell me. There's a strong argument that every time we have a recession or depression, something different causes it. We had the mortgage-backed securities in 2008. We had the tech bubble in 2000. So, we had the coronavirus, quote unquote, in 20, whatever year that was, 1920. So what is the old 2022 stock market crash going to be? Well, what if the stock market crashes the actual economy? If we get a stock market crash, they can't prop it up anymore, and then that brings down the economy instead of the other way around. Because you would think that the stock market is, a measure of how the economy is doing, but in all actuality, the economy is shit right now throughout the world. It's absolutely terrible. The stock market is doing great and at all-time highs. So if the stock market crashes, imagine what that's going to do to our already shitty economy. And don't think that I'm wrong, because a lot of the money that's getting spent right now is getting spent because people have made money in the stock market and cryptocurrency and all that stuff. So if we start to see asset prices collapsing, or the value of people's homes collapsing, or whatever, that's going to be extremely bad for the actual real economy. So let's go into our sectors of the stock market. XLB materials, retesting or testing for the first time, the 200 exponential and simple. In between them for right now. Again, like always, the first time we retest that area, we would expect it to act as support. We do also have a previous low at the same area as well. But if we come up here and put in another lower high, it's going to look like a descending triangle. I don't know what I have drawn here. That was from a while ago. Let's go ahead and clear this off. We know that we know how to do technical analysis. We don't need to keep seeing our winners over and over. Now it looks like we have basically, something like this taking place. A big bearish descending topping triangle pattern. So we have a high, a low, a lower high, and then that same low again. We come down to it again, maybe get a lower high before then, and then eventually we break, get the measure moved down, something like that. Still looks okay because it's above the 200 exponentials in between the 200 simple, but not looking great for the old material sector. XLC communication, much stronger, well above the 200 exponential and simple, but the 200 simple has crossed above. The 8 and 21 have crossed to the downside. We are in the bearish control zone. Looks like it wants to have some kind of reaction rally, but does it get down to our target before then? We'll have to wait and see, but still our target down here. But once we lost that key support line that we had forever and the 821 crossed to the downside, that was obviously a bearish move for the communication sector. XLY, consumer discretionary, basically hanging out at all-time highs, one of the better looking charts. And this is a perfect example too. 200 simple crosses above the 200 exponential. We later put in new all-time highs. That's totally viable. So now here we have a giant ascending channel rather, or ascending wedge, I guess you could argue. So we have low rather, higher low, higher low. We have high, we have higher high, higher high. But it looks like we're getting ready to break down from key support, which are previous all-time high, and then also the support of our little pattern right here as well. So if we do break down from that, we could do a measure move of the actual pattern itself, but obviously reverse because I start at the bottom instead of the top. So a breakdown would take us, we would initially obviously probably see some support at like 173, but it would not be unrealistic to think we come down to 165, which also is the beginning of the pattern itself, which is typically how the measure move break of these patterns works. At which point in time, you know, we'd have to wait and see, but, you know, we'd be below the 200 exponential and simple. Doesn't have to happen, but definitely want to be careful with consumer discretionaries. XLE energy, obviously looking very strong. You know, even though it's terrible, it's like XRP in the sense that it looks good now, but when you zoom out and look at the whole chart, it still hasn't put in new all-time highs, so that's bad. But it's good short term. So energy retesting the highs, the cycle highs up here. It has 200 simple above the 200 exponential, but it basically put in, I believe we had an inverted head and shoulders. Yeah, worked out perfectly. Oh, look, we hit our target perfectly too. So we had basically our left shoulder, neckline, head, neckline, right shoulder, up to our break of the neckline. Measure move break was our green arrow right here. The green arrow takes us up to the exact target we hit. Holy shit, that's literally the exact target we hit. Fucking nailed it. 56 bucks, at which point in time we saw a little bit of a pullback. I would not be surprised to see it pull back a little further, but still looks very powerful. Strong trend right now. And just because the 200 simple did cross above, but now the 200 exponential, since we got such a violent move afterwards, the 200 exponential is going to try to cross right back up above it again. So, you know, at the end of a very powerful downtrend, we have now entered into a bullish trend. We have quite a bit of resistance through this area right here. But, you know, once we start just chewing through this resistance, this thing could go absolutely parabolic. So, energy looks pretty good. Still showing a little bit of weakness, but looks pretty good. XLI, the old industrials. Just barely hanging on to the 200 exponential and simple. 200 simple is above the 200 exponential. Obviously losing strength in the trend. Been bearish on industrials since the breakdown of basically the top of the channel. We broke down below our heart line right here, and then we have an ascend. That was our ascending channel, and then we have obviously our sideways channel as well. And we broke down from the bottom of the sideways channel, came back up and failed. So for right now, we could bounce this and get a move back to the upside, but I'm looking at 102. $100 is going to be strong resistance for this. I do expect this to get down here to $89, and then when we really zoom out on this chart is when we get the big picture. You know, we have basically that little sideways channel here. We have that bigger ascending channel here, and then we have going back to 2008, 2009, a gigantic ascending triangle. So we stay in the top of the channel the majority of the time, and then when we break down, we touch the bottom of the channel. You know, if we go to the monthly, it looks a little more realistic. And then same thing I'm expecting to happen with this one. We stay in the top of the channel, and then we break down from it, and then I expect it to come down to the bottom of the channel, which just so happens to be the heart line of the larger channel as well. So I'm really looking at $90 as a potential price target. And again, that would be a breakdown and measured move of that channel we already basically broke down from. So again, lots and lots of confluence on the industrial sector. XLF financial up at all-time highs right here. Rising rates, you would say that makes sense. That's how a lot of banks make their money, off of mortgages or loans or auto loans or whatever. So it makes sense. Lots of headwinds as far as like innovation and stuff. PayPal, crypto, whatever. But overall, Federal Reserve maybe going to take your job. Janet Yellen would love to just say, fuck you, banks, and cut them out. Cut out the middleman and just sell the pot straight to the people. But right now, the banks are in the middle. They're the middleman, buying up ounces and slinging out ace. But Janet Yellen would love to be the world's drug dealer. Well, the U.S.'s drug dealer, I should say. And by drug, I mean stimulus/loans. And by, ace and ounces, I mean, dollars and bills or Fed coins. But XLF looks okay. It's up here at, basically all-time highs, looking to break out. 200 simple is above the 200 exponential, but this is probably one of the best charts. As a sector, the financial sector looks better than just about anything else. XLK, tech, showing some weakness here. We got a breakdown of our pattern. That was the support we wanted to hold. We broke down from it. Now it's acting as resistance. 8 and 21 have crossed to the downside. 200 simple is crossing above the 200 exponential. I believe we have a target. Yeah, this is our target previous high right here. I would expect, basically not taking into account time, that we're going to come down to the 200 exponential and simple, and then also that 143. But, it's going to be a buy the first time we come to it. Bearish control zone, bunch of red histograms, but I think tech's going to come down there and get bought up. XLP, consumer staples, bouncing that 200 exponential and simple. 200 exponential is still above the 200 simple, one of the few assets we're looking at. So I would expect this bounce right here. If we get back above the 8 and 21, cross to the upside and new all-time highs. Looks like we were basically putting in, obviously this was a very key level, as that was the resistance back here that we kept bumping our head on. But it looks like we're putting in some sort of like wedgie. Or no, wedge. The wedgie's the other thing. We basically had something like this, broke down from it, finding support right here, and then it looks like we want to just pop back up. This is one of the more bullish charts, so again, my bias on this is bullish. We had an underperforming move that turned into a double top, a little M pattern right here, breakdown, measure move to the heart line, come down to the bottom of the channel, find support at our previous, assuming that this yellow support holds, I expect this back up here at all-time highs again. I really do. And technically, this channel held, so I still look at this measure move as potentially playing out. If we get up here, I think this going to $74 sometime in the near future. Consumer staples, XLU, utility sector, pretty powerful candle. We did break down below the 200 exponential and simple. 200 exponential is on top of the 200 simple. We have reclaimed the slope. For a minute there, it flipped over. Hard buy coming out of the bearish control zone. Multiple green histograms. So it looks to me like we're going to probably consolidate here for a bit and then pop up. I do expect this to go to new highs. The real question is it going to go to just new cycle highs, or is it going to take out this all-time high, which is basically the same thing at this point in time? And I do think it's going to. I really do. I mean, this is starting to... Man, they're starting to look pretty damn bullish, honestly. Especially going into winter, like taking into account like seasonal and everything. We might not get that. I mean, we basically hit our box, but we might not get that perfect entry. At this point in time, it might be worth the momentum play. Because if this thing jumps up here, just a retest of the heart line is basically 13%. And then a retest of the top of the channel, 30%. And let's be real, utilities doesn't move much. And this is also a safety play. So there's a lot of fundamental and technical reasons that this 14% might be nice. Because we might see this 14% to 30% to the upside while the rest of the market's going down. XLRE, real estate, looks okay, holding a key support level, still above the 200 simple and exponential. 200 exponential is on top of the 200 simple, so we're still in a nice bullish posture. We are in the bearish control zone, but it looks like the Stochs are getting ready to cross to the upside and potentially exit the bearish control zone. We're starting to see a couple green histograms showing up here. We are still below the 8 and 21, but if we consolidate here just for a bit, again, first touchdown to the 200 exponential, I would expect to get bought up. And this looks like it wants to go to new all-time highs. It really does. You know, very bullish still. XTN transportation starting to show some strength, and maybe this is our, you know, basically like going into the holiday season, like year-end strength that we were talking about. This operates very cyclically. We're basically back here retesting the highs. 200 simple is above the 200 exponential. We have retested both, but the 200 simple is just pushing the price up here. So it looks okay, but cyclically we do want to pay attention to this. Because we basically have broken down from the ascending triangle, or ascending channel rather. We don't want to see this get rejected here and then basically get our measure moved to the downside. We basically got about half of it initially, but typically what happens with this is it goes into these long ascending channels to the upside and then it breaks down violently, long ascending channel to the upside and then breaks down violently. Here we see we broke down from the high, retested that high, put in a new low, came all the way back up to that high again, triple topped, put in a new lower low, and then here it looks like we're basically looking to come back up here again and do the same thing we did last time, where we get the double top, break down to a new low, and then potentially come back up here again. You know, and this could play out literally over, you know, I mean, could play out over like a year plus, essentially. Very cyclical though, you know, as we come up on like the Christmas holiday and everything, we would, or, you know, end of year holidays, whatever you celebrate, you know, a lot of people travel, a lot of people like ship stuff, you know, etc. So rental cars, plane trips, you know, shipping, all that stuff's good. But who knows with the bottlenecks in the transportation, like as far as like shipping containers and stuff, who knows, you know, extra regulations from airlines. A lot of people probably won't travel because they don't want to get the, you know, special medicine. They don't want to get medicated, you know, or maybe they just are medicated and don't want to be around other people because people are gross. So a lot of headwinds. Jets looks terrible. Did not even get close to its previous all-time high. Has multiple like $1 trillion bailouts and still looks like trash. Barely above the 200 exponential and simple. Hanging on to them for now. Putting in sort of a bottoming pattern here potentially, but I don't know. It looks weak. A lot of resistance above our heads here. We'll have to see what happens with this one, but I just don't see the airlines ever getting back to capacity again. Hail looks bad. Basically big descending channel below the 200 exponential and simple. 200 exponential has rolled over, and we see the same pattern again. 200 simple gets on top, tested as resistance, barely hangs on to 200 exponential, and then starts to break down. This is what it looks like when a market rolls over, you know, and then vice versa. You know, this is what it looks like when a market bottoms. This is what it looks like when the market tops. And then we rinse and repeat. UPS, below the 200 exponential and simple now. Looks bad. 200 exponential has rolled over. 200 simple has like basically a flat slope. We're below the 8 and 21. We're in the bearish control zone. Bunch of red histograms, red slope line. Looks bad. We have quite a bit of support through this region. I would expect probably around 175 as some initial support. But does not look good. It's going to be tough to get back above the 200 exponential and simple. FedEx looks like trash. You know, had a big hardy gap down back here. It's trying to bottom out. It looks like it wants to try to fill this gap, like 250, 10% move to the upside. A couple green histograms, hard buy signal coming out of the bearish control zone. Just breaking up to the 21. It's going to put us back at 236. At which point in time, I mean, there's probably a scalp. There's probably a scalp in play on this one. There's some kind of setup here. I mean, if we take out the low, that's going to look bearish. So, you know, a nice tight stop, like 4 or 5% with upside target of 11%. So basically like 2 to 3x risk reward. Probably is worth a shot. Probably is worth a shot, especially coming into this time of year. But again, it's got to be a scalp because it's counter trend trade. We're below everything. 200 exponential and simple have rolled over. 8 and 21 are strongly angled to the downside. Looks terrible. Looks terrible. I'd rather scalp something bullish than something bearish, but Sometimes you just take what's there for you. So all right, let's keep moving. DXY still very bullish, above the 200 exponential and simple, higher lows consistently, basically at highs right here. Dollar looks very, very strong. Getting ready to, or has already arguably broken out of the inverted head and shoulders. We have potentially that same, neckline pattern, depending on if you're looking at it as a Adam and Eve bottom or a head and shoulders slightly descending, neckline right here. But breakthrough would take us up somewhere around like 96 to 98. Quite a bit of resistance through this range here, but I think very soon we'll be at 95.75. We are seeing some bearishness on the indicator oscillators, hard sell coming out of the bullish control zone. We are also seeing, looks like we have invalidated the bearish divergence, so that is good. Looks strong on every time frame though. Let's just switch to the monthly and we'll go from there. Turning off our drawing tools. We are for the first time on top of the 200 exponential and simple. Both are sloped to the upside. We are above the 8 and 21. They are getting ready to cross to the upside. I think we will very, very soon be retesting the highs back here. And potentially, who knows, going to all-time highs. This is like a 40-year chart and we're now bullish. So, you tell me. 30-something years bearish, a couple years bullish. Looks like obviously we bottomed back here in 2008. So it took us 10 years to grind up here, and now we're officially bullish as of basically, December 2019. So going into 2020. In the last 2 years, we still sold off. I would expect now, after finding a double bottom support, a multi-year, potentially even decade of bullishness. So very bullish. Short term could see a little sideways to down action though. Really could. Tesla still running into that same resistance. This was the area we talked about. The longer we chop around up here at 781, the more likely we are to break through it. And if we do break through it, I think we retest all-time highs. I think Elon Musk is a very intelligent man and a master at cooking the books. So as long as he keeps cooking the books and making his numbers look good, I think Tesla's probably going to the all-time highs. I have no interest in it at these prices. But as long as it's popular and call options are determining the direction of our markets and Elon is still in the game cooking those books, I think there's a very good chance it goes to all-time highs. Uber, below the 200 exponential, below the 200 simple, negative slope to the downside, retesting as resistance right now. Inside, technically, the bullish control zone. I think this is our retest, and it's getting ready to break down. These are like the counter trend scalp moves that I like to take, but I think this is going to get rejected and sell back off. Could easily get to $50, but I think it's probably topping out in the next couple dollars. Pinterest looks terrible, below the 200 exponential, below the 200 simple, just consistently selling off. New cycle lows right here. There's some support along the way, but I mean, if the bottom drops out on this thing, Pinterest could easily be at like $38. I would not be surprised. Go away. Wish, trying to bounce that 1.618 Fibonacci extension from the low right here to the high right here. This thing trades very technically. I mean, it looks like trash though. It's at all-time lows. It looks absolutely terrible. Everything tells you it's going lower, but it's trying to pick up some kind of momentum as it goes down to the upside. It looks terrible, but at the same time, it's now under $5. So, it has an actual working product and it's under $5. Could be one of those long plays. Airbnb broke down below the 200 exponential and simple, back on top of it. This thing looks like it's going lower. It looks like it's going to try to come down and put in a new higher low. Bumble looks like it's coming down here to retest these lows right here. This was the ascending triangle that it was trying to maintain, broke down from it, tried to get above it, and it looks like it's going lower. This looks weak. Again, until we break above and hold above 57.50, it looks terrible to me. Well, not terrible. It looks bad to me. Baidu looks terrible. Below the 200 exponential and simple, just both slope to the downside. Absolutely terrible. I have no interest in China stuff right now. Alibaba, same thing, exponentially worse. Everything angled to the downside. You know, I mean, it just looks terrible. Eventually, if it starts to carve out a bottom, we can take like a reversion to the mean play, but you know, you're just catching a knife at this point in time. TME, 10-cent music, all-time lows, looks absolutely terrible, absolutely horrible. Some bullish divergence playing out or trying to play out right here. Maybe gets a pushback up, but I need to see at least the 821 cross, and then maybe there's a reversion to the mean play right there, but not now. Diddy, I mean, giant descending triangle. All it's ever done is put in lower highs and that same low, and eventually the low is going to break, and it's going to go straight to zero. But, I mean, it's trying to carve out a little bottom here before it goes lower. Kanzun Limited, BZ. Again, same thing. It's just oscillating around our blue line right here. The key is does it take out its previous low? And then it has, you know, invalidated the trend. I think this is going much lower. I mean, that's a pretty violent candle there, too. JD.com, below the 200 exponential and simple. This was our retest. It failed, and now it's going much lower. I mean, indicator oscillator is looking kind of tired down here, but, you know, it just got a retest to another lower high and is below the 200 exponential and simple. Looks bad. Everything Chinese looks bad right now, except for some of their women are pretty hot, but the stocks look bad. The real estate market, not great. Stock market, not great. You know, policies, not great. Threatening to, like, you know, take over islands and blow up entire races of people or countries. Not great. But, you know, who am I to judge? Hey. NEO, terrible, below the 200 exponential and simple, selling off. EDU, this thing's trying to carve out a bottom right here. Obviously, you guys know I have a little scalp play on this currently going. We'll see how it works out. You know, 123% to the upside, 25% to the downside. We'll see what happens with it. You could even tighten up that stop and say if it took out like a $1.78, you want to be out of this one. But it's back above the 8 and 21. Looks like they're about to cross to the upside. I mean, there's a big old breakaway gap right here. This thing has sold off massively from like 20-something dollars out of like, I mean, this chart actually has me like super bullish, honestly. This is the long-term chart. And if we look at, you know, basically what happened here back in the day, this is 2007 to our 2011 peak. You know, we basically put in this giant, like, ascending wedgie. Or wedge. It's wedge. Wedgie is what I give the people. Wedge is what I draw on the chart. That's right. Giant wedge, breakdown from the bottom to the top. We retest the 618 and then new all-time highs. And then we have like this ascending, you know, rounded wedge deal going on here that we touch quite a few times along the way. The moment we break out of the itty bitty titty of that, the little tip, we break down. And where do we go to? From the bottom to the top, perfect to the 618. And then each one of these monthlies has been holding above the 618. We see a pretty bullish green candle here, a fairly bearish kind of candle, but gets bought up. And now we're seeing a little bit of strength right here in the bearish control zone, all red histograms. Am I catching a knife on this one? Yeah, but it's $2. So can't go that low. And it's also like an actual real established company that does stuff. And a lot of this was based on like the FUD of China saying you can't do like private tutorial like stuff for like your little smart kids anymore. Every little Chinese kid deserves the same education. Well, they do like other education too. So I think this might have been just like an overreaction, like, you know, liquidation, stop, run, hunt, whatever. But trading very, very technically. And I think there's a possibility here, you know, not saying it goes to new all-time highs, but even just this little scalp is like 123%. If it does go from $2 back to all-time highs, it's like an 11x. So probably not a bad trade. Probably has some pretty good risk reward. You know, take a while to get there, but just if we close the gap or we retest some of these other fibs, it looks good. So, yep, that's a big juicy one. Got some momentum in play here. We'll see what happens. It probably just goes to zero. Peloton looks terrible. Obviously, Peloton is obviously trash. It's like the freaking Nordic track of, you know, the 21st century. It's total garbage. No one wants it. They had to lower their prices. They like suck up your pets, they'll suck up your children, and then spit out, you know, not what you want. Not good. Like every regulatory company or every regulatory what you call it, body is like after them right now. So, you know, as soon as that FUD hits, when like the SEC is like, hey, when the like all the little regulatory industries in all the United States finally crack down on you and you're already breaking down from kilos, where are you going to go after that? I mean, probably going to be like $36. So, but in their defense, they are making new sweatpants and hoodies. Yay! So Peloton going to zero. TSM, Taiwan Semiconductors, you know, obviously still same, just range bound forever in the semiconductor space. A lot of this is probably because people don't want to invest in a place that might not exist soon. Not good, not good. Back down here at the lows, below the 200 exponential, they're rolling over. Bearish control zone, bunch of green histograms. I mean, you could argue that it's just going to bounce back to the top of the zone here, and potentially there is a trade setup in play. I mean, it's worked out every other time, but, you know, it works until it doesn't. 15% might be worth taking a little nibble at. I don't like that it lost the slope on the 200 exponential. I mean, there's probably something here. Even just a little quick scalpy scalp to the 200 simple, we could argue there's something there. Better tighten up that stop loss, boy. Don't make me tell you again. 3% stop with the 8% moves to the upside. Nice little 2.6 to 1. Could be okay. And then if we get the big boy back to the top, probably a little. $15 with a 3% stop loss, about 5 to 1, just shy. Probably not bad. But, you know, breakdown going to take it down to like $90. So you want to be out of that quick. We'll see. It's probably going to gap down when it goes, though. So who knows if you want to be a part of that. Intel, horrible. Has been horrible for 20-something years. Still hasn't put in a new all-time high. And has triple bearish divergence on the monthly. Below 200 exponential on simple. 200 exponential is already rolled over. You guys know how I feel about Intel. NVIDIA. NVIDIA is strong. I like NVIDIA. It's above the 200 exponential. It's above the 200 simple, but in a correction, at least for now. We'll have to see what happens. There's quite a bit of support through this range, but there's a good possibility it's coming down to like 180. But I look at this as a buying opportunity. NVIDIA is one of the strongest stocks, in my opinion. AMD looks a little less strong. Definitely looks like it's coming down to 200 exponential and simple. 200 exponential back above 200 simple after it finally broke out of that range it was stuck in forever. But now it just looks like a descending triangle. Breakdown, retest. Looks like it's going to $90. I'll probably buy it at 90 though. SMH, VanEck Semiconductor ETF. Just a bunch of semiconductor companies inside of this little ETF if you want a little taste of the space, so to speak. 200 simple above 200 exponential, retesting it now. Probably going to be a buying opportunity and take us to new all-time highs, but it's definitely losing strength. Very strong support, you know, support through here, support off the moving averages. I don't even know. Too much going on there. ARKK looks like trash. Below the 200 exponential on simple, they have rolled over. Cathie Wood has failed, not as a mother, not as a human being, but as an investor, as a fund manager. Failure, absolute failure. Back at November 2020 price action. So if you bought this anytime in the last year, you are a loser. Not like a loser, like you're bad at things, but like you're losing money. But you might be both. I don't know. But if you're listening to this, you're probably cool because you're my peeps. But if you bought ARK, you're definitely a loser financially. ARKF, same thing. Slightly, nope, still, it sucks. It sucks. December 2020. So you're slightly less of a loser depending when you got in. But finally, the 200 simple has rolled over. 200 exponential has rolled over. It's getting denied right now. Bearish control zone. Bunch of red histograms. Oh, sweet, sweet Cathie. Fail. Skills, new all-time lows. Once it took out this area right here, I mean, it's just letting go. And I expect it to continue letting go. This looks absolutely terrible. Below 200 exponential, below 200 simple. Looks like death. not going to catch a knife on this one. But eventually, again, once something goes under $10 and it has a recognizable name, I start paying attention to it. Because eventually one of two things happens. Well, one of three things. Either goes to zero, which doesn't happen very often. It goes to a very low price and then eventually carves out a bottom and goes up. And then it has, tons of possibility. Or someone else steps in and buys it, which happens a lot. So we'll have to see. But I start paying attention out of like the side of my eye here and there. But right now it still looks terrible. Teladoc looks terrible. Below 200 exponential and simple. Selling out. New cycle lows right here. Broke down from this level. It's got a little bit of support left right here. But, this thing, if it lets go, $80. So get ready to lose like 30%. And that $80 to $90 range is a 618 too. So, this thing could just get absolutely wrecked. Looks so bad still. Trying to carve out some kind of bottom, but it's well away from looking good. Palantir, below the 200 exponential and simple. Well, technically it's above the 200 exponential, below the 200 simple, but they both flip red now. This looks like it's failing. Looks like it's getting ready to roll over. Bearish control zone, bunch of red histograms, lost the slope. Below the 8, below the 21, above the 8. It's trying to do something right here, but it's just probably a dead cat bounce. UBX, Unity Biotechnology, again, looks terrible. Breaking down, new lows, going straight to zero in a hurry. But again, watching this for the same reason I watch some of the other like trash bag stocks that go to damn near zero. Unity Software, looks okay. Back on top of the 200 exponential. 200 exponential has crossed above the 200 simple. Back above the 8 and 21. Looks like it may have carved out a bottom, and it looks like it wants to come up and retest the highs. It did, however, lose the slope on the TJD TDMACD. It is in the bearish control zone, so we'll see. It's probably just going to put in a lower high here and fail. Where did we get to? The 618. It fell just short of the 786, so we'll see if this scalp works out to the 786 at 146, but I think it's probably just going to top out and roll over again, but looks better than 90% of the other charts we looked at. Zillow looks terrible. Below 200 exponential and simple, they have rolled over, sloped to the downside. Below the 8 and 21, took out our cycle lows, just putting in a series of lower lows and lower highs. Hanging on to this zone for now at like $88, but if it breaks down from there, support at like $65. Looks terrible. Looks terrible. Corsair, retesting the lows again, and it doesn't look good. Looks like it just wants to keep falling. And if it drops from here, probably going to like $21. After that, maybe 18. Looks bad. Great equipment, great company, but the stock is terrible. Zoom, absolutely terrible. Below 200 exponential and simple, slope to the downside, below the 8, below the 21. Runaway gap here, making new lows, cycle lows, barely hanging on to like 229. If it breaks down from 229, probably just going straight to zero. Zoom's out of business. No, probably like $175. This should hold though, 231, at least temporarily. At some point in time, I'm looking for a reversion to the mean, but we've basically just gotten a bunch of pathetic attempts and then it just keeps going lower. So not catching the knife on that one. Square, 200 simple above the 200 exponential, barely holding on to it. Again, everything looks so bad. The indexes are like the only thing that looks decent, and even they don't look good. PayPal, bad again. 200 simple above the 200 exponential, breaking down. Same thing. I'm just going to say samesies from now on. Every time the chart looks the same. eBay looks pretty good. 200 exponential above the 200 simple. Oh my gosh. In a short-term correction, but putting in a series of higher lows and just put in its all-time highs recently. So like one of the best charts we've looked at. Snap, 200 simple above the 200 exponential. We talked about this breakup right here, and then the entire thing sold off. And at this point in time, there's nothing left to do but close this gap. $63. It tried to break out. I'm still looking for that target down here. At which point in time, I think it will come back up to 70 for a quick little scalp. But, breaking down from here is not going to be good after a failed breakout to the upside. Apple getting ready to retest the 200 exponential and simple. Perfect example. 200 simple goes above the 200 exponential, puts in a new all-time high, but still weak. If it stays above here long enough, the 200 exponential crosses back up, goes bullish again. If it does not, it probably rolls over and starts looking like the rest of the market. Potentially trying to put in, I mean, it's got to hit the 200 exponential on the simple, really. Amazon, man, looks so bad. Has done nothing forever except for have a throw over top below the 200 exponential now, below the 200 simple now, and they're rolling over to the downside, bearish control zone, bunch of red histograms, 821. Amazon looks like it's ready to let go. I forgot. I forgot about that. Okay, so we had our little scalp to the upside here, which was our shoulder that we had predicted, and now look, it's perfect. We have a left shoulder, head, right shoulder, and now it looks like we're about to break down from the head and shoulders. And where are we going? Back down to the bottom of the range, which I will look at as a buying opportunity. I will buy Amazon at 28.68. Is it going to get a scalp back up 23% to the upside? Maybe not, but it's literally been trading inside this range since June of 2020. So more than likely, it keeps trading inside the range. So even if it pokes its head out the bottom, I'm going to be buying Amazon. And honestly, I mean, Amazon's a good company. I think Amazon is a gift at $2,800, at least for a scalp. After that, if it breaks down from the channel, could it go much lower? Sure, 2,400, whatever. But long term, Amazon is, look, there's only going to be like 5 companies in the future, and Amazon's going to be one of them. So, I mean, literally our whole life is playing out that movie Idiocracy. So I think like the Costco of Idiocracy is going to be like the Amazon of like real life. So probably a good idea to have that. Facebook, they like put every other company out of business and then reopen all the businesses that they put out. But it's just an Amazon version of it. Facebook broke down perfectly at 200 exponential. I mean, look, who knows what's going to happen with this? Is Facebook going to get in a bunch of trouble? I mean, did they turn off all their servers and wipe everything because they were guilty and had a bunch of like, stuff that they had to hide? I don't know. That's speculation. Is it convenient that randomly like Facebook goes down when there's a whistleblower? Did they do it to like take over the news cycle? Do you trust them? I've said for Facebook for a long time, one of the better charts, but total shit company. Total trash bag people. Mark Zuckerberg is a scumbag, alien, lizard man, robot, or somewhere in between. Probably, speculation, a pedophile as well. But, just judging by like who he affiliates with, Bill Gates, Jeffrey Epstein. He's just one of those guys. So what do I know though? And by the way, I do not have any suicidal tendencies or anything. So if I disappear, it was definitely Mark Zuckerberg. Google, stronger than most. 200 exponential is still well above the 200 simple. Looks like we're just going through a little rolling correction here. Could easily come down here to like 24.11 or whatever, but got to be bullish on this. Google's great. I don't know if you guys have ever heard of YouTube, but phenomenal. Definitely does not censor anything that you put on there. 100% trustworthy. I am a huge fan of Google and also of YouTube. They are phenomenal companies and very good. And they definitely don't censor anything. And they obviously love me because of my clean, wholesome content and share it with your friends just like they do to help me out. So wink, wink. Netflix. New all-time highs after a long consolidation. Looks good. 200 exponential is getting ready to cross back above the 200 simple. Netflix looks good. Looks very good. Got to be careful of potential bearish divergence developing, but still very early to tell. I think this goes much higher. It looks like it wants to go much higher. You could do we have obviously the measured move of the channel, and then we also have a Fibonacci extension that we could use to try to get a target to the upside. So from the high here to the low here, previous all-time high to the pullback low, that's going to give us our Fibonacci extension target. And then our, I should probably change colors so it's a little. And then the breakout of the channel is the blue arrow right here. And they both kind of come in at about the 1.618. So I would say that's probably our target for old natty Netflix. Somewhere around 664 to 677 looks very viable at this point in time. One of the only things in existence that is currently putting in all-time highs. But let's keep in mind, this was like an underperformer since July of 2020. It basically just went sideways. So, you know, if you just sat in this, you definitely lost. But you're winning now, so that's good. So let's just rip through our commodities real quick, and then I'm going to get out of here because I am hungry, time to cook something. So we'll start with gold. Gold looks terrible. Below 200 exponential and simple, rolling over to the downside, below the, well, in between the 8 and 21, trying to carve out some kind of bottom right here, but it still looks bad. Still looks very bad. Silver, we were in a giant channel forever. We broke down from the channel and it's acting as resistance. If we get the measured move, it takes us down to the teens. Not good. We have 200 exponential and simple rolled over to the downside, and we are in between the 8 and 21, which are crossed to the downside. So very bearish for now. If we reclaim this area, though, there will definitely be a potential scalp to the upside on paper, silver. You know, you can't obviously do much with premiums where they are to like physically buy it and then sell it. But accumulation-wise, you know, could be potential. Gold-silver ratio, we talked about this a little bit earlier. Just carving out this resistance. Next push up, 82. Then after that, somewhere around like 90 or something, it tops out, goes much lower. Could take a while to happen, though. Platinum, okay, so look, this is what we were talking about with platinum. We have this descending resistance here. We're below the 200 exponential and simple, which is bearish, but it looked like we were trying to grind this out. We're about to get the 821 cross right here. We broke out. We're coming back down to retest our previous resistance as support. If this holds right here, we will have a potential scalp to the upside for like 9 or 10%. Again, on paper, paper platinum. You don't want to like go out and buy a platinum bar, pay premium, go sell it, etc. But, you know, obviously not financial advice, but, you know, 8 to, depending, you know, if we get a push back up. And then who knows, a lot of times these scalps will actually turn into like a real position, and you can convert your, you know, paper metals into real metals by like selling your paper position and then going to a pawn shop or an online broker and buying them. But, you know, 8.5% to 14% with a little 3% stop loss. You know, again, though, scalp, because platinum just looks terrible. Looks very bad. But good short term, maybe, if that holds. So the miners obviously look terrible. First Majestic looks absolutely horrible. The 200 exponential and simple both rolled over to the downside below the 8 and 21, putting in new cycle lows. Lot of support through this area, trying to put in a bottom right here. But, you know, I mean, at what point in time are these a good deal? Like $11 right now for these? Like, these are real companies with actual, like, products, silver in the ground. They own mines that they mine silver with. So at some point in time, you know, it's probably worth a little dabble here and there. I take a little nibble here and there on them. Silver Juniors, it's got a bunch of other stuff in it too, but obviously First Majestic as well. Looks terrible, below 200 exponential and simple. Trying to carve out some kind of bottom. Triple bullish divergence on this, which I like, from here to here to here, here to here to here. Is it going to bottom right here and then just push back up to like $15? Yeah, probably, but 20-something% move. USAS looks absolutely horrendous. 70 cents and just keeps dropping, and it's going to keep dropping forever. Once we broke down from that support back here, it just looks terrible. You just got to wait on this, catching a falling knife for sure. Tilray, you know, I was trying to make a strong argument for these pot stocks, like to myself in my head, that they were like a good deal. And then I really went and like dug through the financials and everything. And, you know, while they're like cheap and have been selling off like forever, they still have horrible like balance sheets, like debt to asset ratio and stuff like that is still just trash on these things. I like to have at least like 50% or lower debt to asset ratio, meaning that if they literally just sold, you know, wanted to pay off all their debts, they could sell half their assets and they would be, you know, have no debts and still have a bunch of assets. A lot of these are like even or like 86%. Like they're just terrible. I don't know. They just look so bad. The 200 simple is still technically angled to the upside, but 200 exponential has rolled back over and we're well below it. Looks like we're going to sweep the lows again. These things have been in a powerful bear market. Like they topped in September 2018. You know, and breaking down below here is like, that's bad. you know, we're at a potential support area, but these things got to really show me something before I'm interested in pot stocks again, honestly. ACB is slightly more bullish. It's got the 821 cross to the upside, but 200 exponential and simple to the downside looks absolutely terrible long term, but it's trying. This one at least is trying to carve out some kind of a bottom right here. But the earnings was still bad. It was a 32-cent miss or surprise. It was supposed to be minus 22 cents, and it was minus 53 instead. So it's a 144% miss to the bad. So I don't know how bad people thought it was going to be since it's rallying after that, but God. CGC, Canopy Growth, just terrible. There's like no life out of this thing. Same thing, just absolutely terrible. URA, uranium stocks just doing exactly what I said. You know, pushed up here, topping out, about to get the 821 cross. You know, maybe we get a buy off the 200 exponential and simple, but you know, these things have already run. We've made a lot of money off of them, and you know, this trend could take 10 years to play out. And the commodity trade is not looking that great right now as inflation fears subside. Or maybe they don't subside, but if they don't subside, why aren't all the commodity like hedges of inflation doing excellent right now? Like gold, like silver, like uranium, like, you know, all these things. Some are doing good, but not recently. UEC, it's like as the inflation fears get worse for some people, other people realize that we're actually going into a deflationary period and that the inflation is all caused by the central banks in an attempt to stop the deflation, but they're not good at it. So certain things go to new all-time highs, but the actual economy and GDP of the world is not going to new all-time highs because it's deflationary, and they're just trying to reinflate a balloon with a bunch of holes in it. UEC, the 821 looks like it's crossing down. Look, looks like these things are topped out and getting ready to sell off. New high right here. Same thing on Cameco. You know, about to lose the 821. I think it's coming back down. It's at support now. Maybe it holds, but I don't know. It looks like it wants to cross the Stokes back to the upside. The Cameco could burst to the upside. It actually looks better than most. URNM, just an ETF of a bunch of the uranium companies, including those we just looked at. Again, looks like it's breaking down here. Much less bullish. Below the slope line. Below the 8 and 21, still above the 200s here. You know, we could very easily come down to like somewhere between $60 and $70 on this. Copper is like a big descending triangle. 200 is above the 200 exponential now. It looks like it wants to break down. So, you know, samesies. $22 it looks like it wants to go to. This is the CPER copper index. Lithium, LIT, global lithium battery. Again, lithium ETF, just exposure to a bunch of the different lithium plays. Looks very likely $72. That's our 200 exponential and simple. That's our previous high right here. We're below the 8 and 21 across to the downside. Looks like it wants to go there. Hydrogen. Oh, look, we finally put in that new low. So yeah, massive capitulation from the breakdown here as expected. And now we have bottomed, at least for now. This is a pretty bottomy looking candle right there. Get bought up fairly aggressively. That's like a little hammer. Looks okay. I believe we were going to put into play some Fibonacci extensions. Let's get rid of these. I mean, from our low here to our high here, bounce of 1.382. I don't love that fib. I would prefer to see it at like the 1.5 or 1.618. But that's still like, you know, this thing just hasn't moved enough that it's like tradable. Like literally if you bought it right now and it just retested the highs, it's like 23%. Just it's worth watching, I think, but a little too soon. LBS1 lumber still looks okay. You know, we got that initial move up. Nice little scalp on the way to the second one. But again, this is what I see on the grandiose scale. We have a left shoulder neckline, head, neckline, and we're pushing up to complete the right shoulder, at which point in time we have a giant head and shoulder stopping pattern. And then where does this thing go? I mean, doesn't look good for lumber here. Let's hope I'm wrong on this one, because that probably means things are bad. Below 200 exponential on simple though. Still not great, but probably has further upside. Caterpillar looks bad, below the 200 exponential, slope to the downside, below the 200 simple, but still has its slope for now, breaking down to new cycle lows. Looks like it wants to hold about $1.80. This is, we're just getting our measured move break from the ascending channel that we were paying attention to this whole entire time. Looks like it wants to come down here to one of these other fibs. A lot of these just look like they're just going to start melting down. The year looks a little bit better, but about the same. Barely hanging on to the 200 exponential. Just retesting these lows. Looks like it's just putting in potentially a double top. An Eve rounded top right here, and then a more pointy looking atom top right here. And then a breakdown from 323. What's our measure move going to be from the top? Basically to the neckline. A break from this would basically be the completion of the breakdown from the ascending channel. Seems very viable that they both kind of like play out together. And then that hits our target right around like 250 or something like that. Yeah. Oh man, AM Antero Midstream Corporation, new all-time highs, or actually new cycle highs. Above the 200 exponential on simple. 200 simple is creeping up above here. Looks okay overall. Better than most. Probably see some continuation. CX, CEMEX, looks weak. Broke down below the 200 exponential on simple. They're rolling over. And it is putting in a new cycle low right there. This thing could really let go if it wants to. Again, I looked at the balance sheet on this one before I sold my position. And it's not good. It's not good. Not good. And you know what? While we're talking about it, Caterpillar and Deere, I looked at the balance sheets on them too. They're not good either. CLF, Cleveland Cliffs. Some of these things have like debt asset ratios of like 85% on billions of dollars. Like how? How is that possible? CLF. I guess, paying out all your dividends and then just hoping the stock goes up. I don't know. I like to see better. I like to see nice, good balance sheets after trillions of dollars worth of stimulus went out. I would imagine you pay down some of your debt, but maybe not. That's not the thing we do anymore. We just do buybacks instead. CLF, Cleveland Cliffs. This whole industry is looking weak. The whole like iron ore, steel. We'll see what happens. Infrastructure plan, if they do such a thing, could do something, but we'll probably just get human infrastructure instead. So invest in childcare and babysitters, not in like actual like roads and bridges and steel and cement and water. We're all about human infrastructure. We're all about that social infrastructure, aka we'll abbreviate it. Instead of social infrastructure, we'll just call it socialism. That's easier. We're all about socialism here. Probably going to break down here. Ford, just looks like a lower high to me. It looks better than most. It's still well above the 200 exponential and simple, but 200 simple crept up here. This little bounce, in my opinion, was just a reaction rally. And then basically like, just this whole like EV, we're going to give you a break if you're a union, blah, 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 blah. Just more forms of bailouts for these companies. General Motors, same thing, slightly worse. Definitely getting tired. We're ready to get out of here. We hungry, gentlemen. Where are we at? This feels like this stream's been going for 3 hours. Oh, it has. Hasbro. We finally got our breakdown violently below the 200 exponential, below the 200 simple, below the 8, below the 21, all angled to the downside. Slope, all red histograms in the bearish control zone. Hasbro getting wrecked as expected. Potentially looking at some of these key fib retracement levels from the bottom from the previous all-time high to the bottom, retrace to the 786. So I would expect a dead cat bounce off the 618, back up to resistance, and then potentially 0.5, 0.382, 236. I don't know. This thing looks like it's about to get wrecked. Looks like it's gonna get wrecked. Guess we don't need this anymore. Probably gonna get wrecked. SC Works, another one of these, I looked at some of these companies like SC Works and like some of the other ones we were talking about today. They're like only a couple of bucks and stuff like that. Their balance sheets actually look pretty good. This balance sheet looked pretty good, and potentially entering into a bullish trend after like literally a lifetime of going down. Previous all-time high over $100. And now it's at $2. If this thing ever went I mean, let's be real here. We'll see what happens. You know, other than a scalp, though, there could be a legitimate position in play for this down the line. But we really just want to see another higher low. And then there's some serious potential here. There's some serious potential. Like if we can maintain like this kind of like support line right here, if we can, you know, kind of hold the 200 exponential and simple right here, 143% scalp, 353% scalp, 50x. I mean, who knows? We'll have to see, but definitely worth paying attention to a couple of these bad boys. Definitely worth paying attention to. Any is another one. Hey, shout out, man. This thing popped up 10%. It looked like it was about to drop down. I'm waiting for this to retrace back to like the 200 exponential and simple. We had a nice scalp already play out on this one, but I'm really just hanging tight on this. Yeah, I really just got to see this thing do something. I'm waiting for it to come down before I'm interested. It's showing quite a bit of weakness right here. Did get a nice little 10% pop, but, you know, so did Bitcoin. I'd rather have Bitcoin than any in my portfolio, to tell you the truth, because at least Bitcoin makes all-time highs, and he just makes all-time lows. This is like the micro strategy right here. All-time high back in 2014 was $2,300. All-time low back in March 2020 was 35 cents. But look at this, though. This is what I'm paying attention to. The 8 and 21 looking across to the upside on the monthly for the first time ever. And then just to retrace up to the 618. Calm down. 1,788%. Could be all right. Might be worth throwing a couple bucks at. Probably just go to zero, though. But might be worth a shot. But again, you know, patience is a virtue for me here. When something's just been getting wrecked for so long, I'd rather buy it slightly higher with a little more confidence. Especially after such a move already off of that 35-cent low. It's already up, you know, like 20x. Walmart looks terrible. Breaking down. Below the 200 exponential and simple. Slope to the downside, 821. Looks like it's about to let go here. 126 potentially. I mean, it's trying to carve out a bottom right here, but what does this tell you about the economy if Walmart's not even doing good? I mean, this is where most people get all their goods and services. No offense, Walmart shoppers. Attention, Walmart shoppers. Attention, Walmart shoppers. I do not mean any offense by my comments. I, too, have and will continue to shop at Walmart, although I do prefer some of the slightly nicer stores. But people at Walmart is like maybe one of the funniest things ever. So, like, being able to just, it's like a reality TV show while you shop. You get to see trashy people in their pajamas and maybe a fight or two, possibly a fire, maybe get shot. Who knows? Walmart's like an adventure. Western Asset Mortgage Capital Corporation, the old WMC in the house. Looks terrible, but we did point out that this thing is displaying triple bullish divergence off of 1, 2, 3 breakdowns. While we broke down from a key ascending support line that I did not want to see break, I am still paying attention to this one for a potential scalp to the upside. Damn. I want to say I looked at the balance sheet on this one too, though, and it was not good. But this is slightly different because... Damn, I can't remember. I should have paid more attention. I should have took some notes or something. But yeah, triple bullish divergence. Could easily have a little pop up for like, 15 to 20%. So I'm watching this. And again, a lot of times when these things get down to like a couple bucks like this, after getting absolutely wrecked, when they do have a nice move, it can just go absolutely parabolic, or somebody else steps in and buys them. Some of these little trash bag companies, it's like the penny stock type thing. People like that stuff. Quick look at this VXX. Obviously, this trade is probably going to fail if the S&P and stuff keep going up, but I still think these play out. I really do. I wouldn't have picked them primarily, but I know you specifically asked about them, my man. QID, just right back at the entry. These probably do. They probably do okay, honestly. I think the stock market is lying right now. Why you lying? I mean, the jobs numbers came back good, which in the messed up world we're in is bad because then the Fed is more likely. Jerome Powell literally said, I just want to see an okay jobs number. Doesn't even have to be good. I just don't want it to suck. And now here we have a good jobs number or okay jobs number, a beat potentially on the jobs number. So at this point in time, Powell's going to announce the taper, which probably the market's going to have that tantrum. The taper gets the tantrum, gets the dumpy dump. So we'll see. MGM, last but not least, yeah, still up here, breaking out highs. Looks like it's just chopping through. And then what we don't want to see is, I don't want to see it come back down here to 43 bucks, because that's going to start looking like a potential double top right here, and then potential for a breakdown. But this looks like it wants to keep cruising. Casino's been looking okay here lately. There is a little bit of bearish divergence taking place on our indicator oscillators. So maybe a third drive and then a sell-off. Back to retest the 200 exponential and simple, somewhere around like 40 bucks when we get there. But I think it probably goes to 48 before it goes to 40. But not a great entry for me. But I think you said your dollar cost was like 20. So, all right, guys. Well, that's it for today. We made it. We made it to the end. 3 hours. Yay. Hooray. Hopefully everybody appreciated that deep dive on Bitcoin. Obviously some nice price action, and you guys know how I feel about the bullish and bearish cases. I don't want to see bearish engulfing candles coming in on today on any cryptos, but especially on Bitcoin, as obviously it is the first mover. Best case scenario for Bitcoin at this point in time, even though we didn't get any follow through after that giant short squeeze up, if we can just go sideways for a little bit, I'll be like bullish on it. But already the 44 hour is looking good. The daily is not too far off. So appreciate everybody tuning in today. Hopefully you guys enjoyed the stream. I will be back every Wednesday and Sunday from 8 p.m. Eastern Standard Time until roughly between 10 and 11. Yeah, so if you didn't check out the yeah, so Sunday, and then I'll do some excerpts throughout the week as well. If you're interested in the group, hit me up, /indicator. Appreciate everybody in the group, including our new member. Although it seems like people have just been like, I don't know what's going on with people. A little bit of lack of participation lately. Hopefully everybody's not getting lazy. But I'm sure everybody's okay. Hopefully making that money, taking some profits. And I know the world's kind of like reopening and stuff. So, well, that's it for today, guys. Let me just check out this chat real quick. BTU coal producer. Yeah, if you're still there, Honky, I can look at that real quick. Oh, which one is that? Oh, yeah, word. Okay, I got you. Which one is that? Do you want to see? BTU? Is that BTU metals? No, it's got to be the, you want the energy, right? Oh, you're good. You're good. I got it right here. Is that what you want? BTU? Peabody Energy Corporation? Coal? Okay, yeah, it's got to be that one. Peabody Energy. I mean, I can always do it in the group anyway. It's not a big deal, but yeah, so BTU Peabody Energy Corp. Let's just rip this one out real quick, and then I'm gonna get out of here. So yeah, obviously put in the high back in 2018, put in the low when everything did. Oh, November 2020. So yeah, we'll do a fib retrace from the top. I imagine we're probably around them. Yeah, so we pushed up to the 786, topped out perfectly. 821 have crossed to the upside on the monthly, which is definitely good in the bullish control zone, all green histograms. But is the move already over? At this point in time, I would say probably, okay, what I would say, let's switch over to a weekly real quick, and I'll break this down. What it looks like to me is we basically have like an inverted head and shoulders breakout, and that was like the measure move up to the 200 exponential and simple on the weekly. It's probably topping out right now, but if we look at the breakdown of the initial move right here to the wicks right there, I will turn this one blue. The breakdown pullback was to the 382. And then if we take that same one to the top right here, let's do our measure move first and see from the bottom to the top right here was $4.40. So then we want this, like assuming that was a wave 1, wave 2, we want this to be at least $4.40, which it looks like it definitely is. In this case, it is $17. So now we want to pay attention to if this is topping out right here, which it does look toppy, from the bottom right here to the top right there, we would expect a similar pullback somewhere in between the 382 and the 0.5. So what I would be looking at is, I'm going to turn this one white real quick. What I would be looking at is potentially taking profits and then reaccumulating down in this zone right here for a pullback. Now, is it possible? I would say between the 382 and the 0.5 would be our bullish pullback, and then reaccumulation between like $7 and $9 roughly. I would not want to see on a weekly it pull back any lower than 448. So I would wait until it looks like it's bottoming and then rolling back to the upside. But again, you know, if it pulls back to like the top of the one, looking at this is the one right here at 448, that's going to be below the 618, in between the 618 and 786. So that is not going to look very bullish to me. So in all reality, like, you know, without putting in too big of a buy zone, this is what I would be paying attention to basically. You know, those would be the two key areas I would be looking for it to bottom out. But again, I would look for it to bottom out and then potentially add at like the 0.5 and see what happens, or potentially add at the 618 and see what happens. But in all reality, looking at the grandiose fib, the big green fib that we have in play from the initial sell-off. Let me switch to the colors on these real quick. It's just a little easier if I keep them. I try to keep the fib colors like sort of the same so that it's like less confusing for people when they see the charts. I would say realistically, the yellow 0.5 is probably where we're going to sell off to. So that would give us a pullback between the green 0.5 and the green 618. Right smack in the middle is the yellow 0.5. So that would be my main target for a re-entry around like 625 or something like that, assuming we top out right here, which typically when we test the 200 exponential and simple, we will sell off, you know, refuel the rocket ship and then take back off to the upside. And then just a quick look at a 5-wave, you know, assuming this played out as we're looking at it, you know, we would basically be looking at something like this and then giving us a Fibonacci extension from the top of the 1 to the bottom of the 2. We see we top, yeah, and this tells me we probably have topped out also. You know, there's so many fibs right here, it's probably hard to tell, but from the top of the 1 to the bottom of the 2, it's at the Fibonacci extension of the 2.618 perfectly, which the 1.618 and 2.618 are our number 1 and number 2 targets. So if we do sell off here, if we do hit our 0.5 retracement, I would say that we're probably going to get roughly similar 1.618 to 2.618 Fibonacci extension target to the upside, which if we look for confluence, the 1.618 will take us back to the 1, which is previous all-time high. 2.618 is the 1.236 of the previous all-time high. So I would say realistically, I mean, you know, without sounding crazy, this thing could go to like somewhere between $46 and $131 long term, assuming it goes to new all-time highs, and this is a 5-wave structure. But that's what I would be looking at, you know, which doesn't seem unrealistic right now. This is coal, right? Isn't this coal? Yeah, I mean, there's like obviously like coal shortages and crazy like, you know, fundamental arguments for this stuff as well. So, but yeah, there we have it, man. Oh yeah, no problem, brother. Yeah, I'm gonna go eat. Good to see you, brother. I will see you guys later. Appreciate everybody that tuned in today. Hopefully you guys all enjoyed the stream, and I will catch everybody on the flip side. Everybody take care of yourself, take care of your family, protect your principal, grow your capital. You know, be cautiously optimistic in these crypto markets, as I am as well. But yeah, there we have it, guys. Everybody have a good night. Good to see you. Good to listen, share with your friends, subscribe, all that good stuff. Crypto Trend Trader, and I'm out of here.